Hello, everyone. Welcome to the most comprehensive Amazon sellers tax workshop. So basically, in this video, you will learn all you need to know whenever you are running Amazon business. You will learn everything about sales tax in US, about taxes in Europe, VAT. Also, we will cover different other global taxes in other countries where Amazon is present. And today, our experts will be coming from the AVASK accounting and business consulting company. They help a lot of Amazon sellers. They also help other e-commerce sellers, and of course, beyond. We will meet their experts very soon. And I would like to present myself. I'm Augustas Kligis. I'm the founder of Orange Click, and here at Orange Click, we run virtual events for Amazon sellers, as well as we did in the past in-person events, which we hope to resume soon. And today in this workshop, I will be co-hosting this session together with Lisette Lees. Maybe you saw her on other Orange Click videos. Hello, Lisette.
Hi, Augustas. Happy to be here and happy to have a great workshop so everybody can get tons of value out of it.
Perfect. And as I mentioned earlier, we will have AVASK helping us to bring the knowledge to Amazon sellers about all the taxes across different countries where Amazon is present with their marketplace. And this video or this session will be in 4 parts. So let me very quickly introduce you to all the parts. So basically, the first part will be all about US sales tax. You will have 1 hour talking only about this topic, and we are bringing tom.meek, who is a partnerships manager at AVASK, and also Timothy.Nelson, who is CEO of AVASK Accounting and Tax Consultants. And they will share all the knowledge about US sales tax and accounting for Amazon sellers. It will last for 1 hour. At the end of the session, you will have Q&A, so prepare your questions and always type your questions in the chat if you're watching live. The next part will be about European taxes, VAT, and also customs. And this topic will be presented by Alex.Robson. She's knowledgeable in European taxes, which can be quite complex because Europe has so many countries. And also Toby Roberts, he will be sharing his expertise in customs and import and export. So the third part will be about the rest of the countries, and it will be in the 3rd hour. We will cover taxes of Australia, Europe, United Arab Emirates, and a few other countries. So in this session, Tom and Piers Eveleigh, he is a business development officer. They will be presenting and sharing with you the knowledge. Again, after each of these 3 parts at the end, you will be able to ask questions. So always prepare your questions, and experts of AVASK will be happy to answer them. At the end of this sessions, of the 3rd session, we will have open-ended or open Q&A session where you will be able to ask any tax-related question, and we will have 4 AVASK experts here online helping you to solve your problems. And now I think I would like to tell and ask everyone, whenever you like the content in this workshop, don't forget to click on the like button below this video and subscribe to the YouTube channel of Orange Click to follow us whenever we post new content, which is targeting Amazon sellers. And again, we are starting now with the 1st hour, the 1st session, which will be covering US sales tax. And for 45 minutes, you will hear the content, listen to the presentation, and type your questions in the live chat box if you're watching live. And at the end of this session, you will have 15 minutes to cover your concerns and questions. So I would like to introduce Tim and Tom from AVASK. They will be delivering you US sales tax situation and presentation. So hello, Tom and Tim, and perhaps Tim, you could introduce yourself first, and then Tom, and then we will start the presentation. And Tom, meanwhile, please share your screen.
Yep. Thanks, Augustus. Hello, everyone. My name's Tim Nelson. I'm the CEO of AVASK US. I'm also a CPA, certified public accountant. I've been helping Amazon sellers for about 10 years now, and helping them in every way from entity formations, bookkeeping, payroll, sales tax, and most importantly, with their business and personal tax returns. And I help those people, whether it's they're located in the US or anybody located outside the United States.
Awesome. Yeah, thanks very much for having us, and Tim for introducing yourself. So great to be back on here. Massive fan of Orange Click. I love all the content you guys are pushing through for e-commerce and Amazon sellers. So my name's Tom. I manage the partnerships for AVASK and have done for almost 3 years now. AVASK, in terms of us as a company, we assist over 10,000 e-commerce sellers with their international expansion. And we focus on the tax piece, the compliance, the accounting, all the things that not many people have a massive passion for, but good job me and Tim do so that we can look after it along with the team here at AVASK. We speak over 20 languages, and we're based in around 12 countries now across the globe. So wherever you're from, whatever you're looking to do, expansion globally, we are obviously at hand to help you. So thanks very much for the intro.
Perfect. So now we're ready to listen. As I said, now we are talking about US sales tax, and I think Tom will be the first to cover.
Yeah, all good. I think just before we start on US, I think tax, as I said, isn't always the funnest thing to talk about. But I think if you're an Amazon seller or you're in the space and you're a service provider and you want a crash course or a one-stop solution to be able to understand the basics of all the tax requirements in the US, Australia, the UAE, UK, EU, and also customs, this is the perfect session to really get involved in and invest in, so that you can obviously speak about it, expand, and so on. So in this session, we're going to be talking about expanding into the US and also touching on not only sales tax, but also sort of the accounting piece as well. So as we've just introduced, so Tim is the CEO of our AVASK US office, which is situated just north of New York, and I'm based in the UK and head up the partnerships here at AVASK. In this part of the workshop, we're going to be covering a number of different things, but I think we're going to start off with really understanding whether you need to form a new entity and form a new company if you like, or if you use your overseas entity. We're going to be looking at the bookkeeping and common mistakes. We're going to be looking at sales tax versus VAT. So what are the actual differences? How does it compare? What do I need to be aware of? We're going to be looking at what is Nexus, marketplace Nexus, probably thinking what is Nexus? Don't worry, you'll find out. And also selling into the US. What are the sorts of things you need to consider? What's the checklist? And we're really going to try and provide some really actionable steps for everyone listening to take away. And as Augustus said, we're going to be finishing with a Q&A, so make sure you get your questions in throughout. So I'm going to pass over to Tim here to expand on the company formation.
Thanks, Tom. So guys, the first thing you want to consider when maybe selling either in the US or you're already in the US and you want to form an entity. Generally, there's 3 types of entities that you want to consider, one being an LLC, another being a C corporation, and then there's one that's an S corporation, but that's only available to people who are located in the United States. Each of these entities have different types of taxation, so they may affect you differently. So it's really based on a case-to-case basis on what would work for each person. Generally, this would affect people selling or located in the United States and want to start selling. For those people located outside of the United States, we'd want to discuss that first. You don't have to form this kind of entity to sell into the United States. We want to talk to you and say, hey, maybe one of these entities are good for you because you just want to open up a branch. You want to separate it from, let's say, your main company located outside the United States. And we would sit and consult with you to see what's maybe the best way to move forward with which type of entity.
Definitely. Yeah, absolutely. I think it's really, really important to understand as to whether you need to actually incorporate in the US or not. But, obviously there's a number of options if you do choose to do so. So yeah, bookkeeping and common mistakes, Tim. Obviously you're seeing a huge amount of accounts and looking after thousands of e-commerce sellers. What are the sort of common mistakes, and would you care to expand to that?
Yeah, definitely. We just finished the tax season here. So most people just finished filing their taxes. And revenue recognition was the most common error I've seen where people, let's say, doing their own bookkeeping made. The basic way to recognize revenue is as money comes into your bank account, you say, great, I have sales, I have revenue, let me make sure I record it. That's true and common for most businesses, except for Amazon. Amazon obviously receives your money, takes out their fees, and then sends the revenue to you. What they do, though, also is report that revenue to the IRS. So we want to make sure that you recognize the revenue that was actually paid before Amazon takes out their fees. It's a common mistake that people make when they try to do their own bookkeeping and only record the revenue that they deposit into their bank account. A lot of people get a nasty letter from the IRS. They call us up, ask them to help them out and try to resolve that. But I'd say that's the most common mistake I see people making with their bookkeeping. The other issues would be with inventory and how to record it. A lot of people, when trying to report their inventory, they'll look at what they have in Amazon, what they have in their warehouses, and say, all right, great, here's what I have in inventory. Problem is there's a couple of other factors that factor into that on whether you should recognize inventory where, let's say, you've ordered inventory but haven't received it yet. Maybe you've made a down payment towards inventory and it's on its way. Or even there are cases where people get inventory on consignment where they haven't paid for it yet and the inventory is already sent to them and it's not due for another 30 days. And so you want to make sure you kind of record your inventory correctly, make sure your balance sheet is right so that your books look correct.
Awesome. Thanks, Tim. Really interesting to go through and some great little tips there for sellers to take away. So Tim, just maybe before we go on to sales tax versus VAT, what would your opinion be, or what would your advice be to a seller that's maybe based, let's say, here in the UK, because that's where I'm from, that's looking to expand to the US? Would you say incorporate an entity, or would you say register for sales tax from my UK entity?
Tom, that's a great question. You do not have to incorporate in the United States to be able to sell in the United States. But there are some factors that you want to consider before making a decision whether to incorporate or not. Some people may want to look to sell off their US branch. Let's say you have your company in the UK and then you start selling into the United States. You may want to keep those two entities separate just for liability purposes maybe, or maybe you just want to look to sell the US branch. Let's say sales in the United States are great. You may get an offer from a buyer of some kind that says, look, we'd love to buy your product and sell it here in the US. Good. Now I have a separate entity. I can just sell that part, keep my entity in the UK, and continue moving business forward. Also, there are some insurance reasons, liability reasons. Hey, let's just form a separate entity in the United States. In case something happens in the United States and there's maybe possibly a lawsuit, they could only sue the US company and not go after the UK company.
Awesome. So again, a further question would be from my side, and what I see sellers asking from an incorporation point of view is then what state, or is there certain states that you would recommend sellers to register in?
For sales tax or for as a company?
Sorry, for a company, yeah.
Sure. For a company, yes. I would always recommend one of the states where there's actually no income tax. As you know, there's many states in the United States. Each state has its own different tax law, which makes U.S. taxes a little complex, but there are a few states in the United States that don't have any state tax, and we generally advise our clients and help them set up a U.S. entity in one of those states to limit their tax liability.
Amazing. Yeah, absolutely. So yeah, number of options really. I would say that the vast majority of e-commerce or Amazon specifically sellers are not tending to register for or like incorporate a new entity. I'd say that the most of them are using an overseas entity to register for sales tax. Tends to be a bit cheaper, but obviously, as you say, Tim, from a risk point of view, or if there's a motive behind it, then it might be beneficial to do so.
Right.
That's really interesting.
Yeah, and that's why it's on a case-by-case basis. It looks what you got to look at what the seller's looking to do and just basically present them their options.
Okay, awesome. So yeah, I just wanted to dive into sales tax versus VAT, and I'm sure, I know that everyone's from different areas, but I'm sure you're either familiar with sales tax or you're familiar with VAT. So let's compare them and work out sort of what the main differences are. I think it goes without saying that. When I go to the US, okay, what always surprises me is when I go to checkout, I don't have the tax already incorporated like it is in the UK or EU with the VAT. It's added at checkout. So one of the biggest differences with VAT and sales tax is that sales tax is actually added at the time of purchase as opposed to already incorporated within the sale price. So that's number one. Now, percentages on sales tax, Tim, would you back me up by saying it's around 5 to 8%, but it can vary?
Yep, it can vary based state to state.
Okay. And there's an additional tax in some cases on top of that?
Correct. Sometimes there's some local taxes on top of the state tax that's each charged in each state.
Awesome. Okay. And with VAT, obviously the VAT rates in the UK and EU differ. But, normally they're between sort of 19, 20, 21% is sort of the average. And there tends to be no additional tax on top of that. But worked out very differently. But same concept, just added at different times, I suppose is the main difference there. From a VAT point of view, obviously the tax is collected and remitted on a government level, whereas a sales tax in the US is obviously on a state level. When we talk about VAT, I would say that VAT is triggered there's a number of different ways of triggering a VAT liability. And I always compare what nexus is. When you trigger a nexus, it's like triggering a tax liability. Triggering a VAT liability is like triggering a VAT liability. So it's basically nexus in my the way that I explain it is it's a presence. It's triggering a tax liability. So when you hear nexus, it's about tax and it's about triggering some sort of liability. Tim, would you agree?
Yes, I would agree. And that was an excellent explanation on nexus. It can be very confusing, with all the different types. But yes, it really does trigger a tax liability that you may be responsible for.
Yeah, taking back, from my experience 5 years ago when I was first looking at sales tax, I know you've been in CPA for many more years, Tim, but from my side, I was just remembering seeing Nexus and I was like, I'm familiar with VAT, tax, fine. Nexus, what on earth is Nexus? So we're going to dive into what is Nexus, funny enough, on this slide here. And there's three main types of Nexus. So we've got physical Nexus, economic Nexus, and also marketplace Nexus. Now, just to break those three down, and we're going to go through them in a little bit more detail. And then what we're going to do is relate it in respect to an Amazon seller expanding in the US, what the states are you need to consider and why. So bear with us just while we try and explain sort of what the three main types are. So firstly, physical nexus. Physical nexus is like having a physical presence in a state. So physical inventory, as an example, would be like having physical nexus. So not all states have all three of these things. Some of them might have one or two or three or all of them. So it's worth considering that. And obviously we're going to break those states down in just a minute. But physical nexus, having physical inventory in a state, much like it is in the UK or EU, wherever you have your stock held, you trigger a VAT liability, which is the same as physical nexus. Agree with that, Tim?
Yep, that's exactly correct.
Okay, economic nexus. Economic nexus, if I compare this again to the UK and EU, it's like having distant selling thresholds. So when you trade cross-border from one country to another, it's the same motive, but from state to state, okay? So economic nexus can be broken down to two further aspects. The first aspect is where you have like a transactional nexus or economic nexus, which is based on a number of transactions, okay? And then the other is just a sales threshold, which will be, can be both of them. It can be one or the other, which we'll dive into in a bit more detail. But think of economic nexus as some sort of sale or transaction threshold from one state to another. Tim, all good on that?
Yep, and it doesn't matter what platform you're selling on. Let's just assume most people are selling on Amazon, but if you're going through eBay or any other platform, it all factors into that economic nexus total.
Absolutely. And marketplace nexus, well, marketplace nexus is really where the marketplace, such as your Amazons out there, that are, they're responsible for collecting and remitting the tax on your behalf. So, Tim, would you want to expand on that a bit more?
Yeah, it's actually really a great thing that, let's say, Amazon does. Marketplace nexus means that Amazon is going to go in there and collect the sales tax for you, but also pay it in for you. So even though, let's say, you're selling in the state of New York, where I'm at right now, Amazon will make sure that sales tax is charged on your transaction, as Tom explained before, and they will collect the money for you and pay it to New York for you, which makes taxes a lot easier for Amazon sellers.
Yeah, it's always nice to talk about the good stuff that goes on, especially when we look at taxes. This is really reflecting in the UK and EU, where marketplaces are sort of the deemed supplier. They're the ones collecting and remitting. So with that in mind, when you see marketplace nexus, well, the marketplace collecting and remitting, that's just an absolute win for you as an Amazon seller, because it's one less state you don't need to worry about. So thumbs up for that. So yeah, in terms of states of sales tax, Tim, did you want to take this slide on?
Yeah, so really at the moment, as of today, because these rules are constantly changing. Right now, there's sales tax collected and paid in 45 states. You would really generally need to register in these 45 states if you had any physical or economic nexus. A lot of these are marketplace facilitator states, so maybe we wouldn't have to register them. But right now, there are 5 states with no sales tax, and we have them listed here, with Alaska, Montana, New Hampshire, Delaware, and Oregon. So those states we don't have to register in or worry about, but there are 3 states that right now there aren't any marketplace facilitators. Those 3 states right now are Florida, Kansas, and Missouri. Now, what does that mean? So if you have any of the nexuses that Tom explained before, let's say for example, physical nexus, we need to register you for sales tax in Florida, Kansas, or Missouri. Because right now, Amazon's not collecting that sales tax for you, and it's not remitting. We would then step in, register you in these 3 states, and start filing sales tax returns for you. Amazon will collect that sales tax, but it's now your responsibility to pay that in, and we would assist you with doing that.
Amazing, Tim. And also, just to maybe put this into perspective, so let's say I'm a seller, again, based in the UK here. I'm thinking of expanding into Amazon.com, into the US. What sort of things do I need to consider from sort of a physical inventory? So from what I take it that you say there is that I'm going to be sending my stock to an FBA center. There are 30 FBA states across the US, of which 3 of them, Amazon don't have marketplace facilitator. Therefore, there's 27 that Amazon do collect, but there's 3 that they don't collect. So these are the 3 that we need to worry about.
Right. And whether you're in the United States as a seller or located outside the United States, the rules are the same. Everyone's got to worry about right now these 3 states. And we would look then to, again, register and make sure that that tax is collected and paid in.
Absolutely. Awesome. Okay. Thank you. Okay. States with sales tax.
Yep. So right now, the economic nexus, which is one of the 3 nexuses, they have basically a transactional threshold or a sales threshold. Now, a lot of these states, again, we don't have to worry about because Amazon is collecting and remitting these sales tax. But again, there are other platforms, let's say like Shopify, that is not a marketplace facilitator. So even though Amazon may be collecting and remitting all the sales tax on your sales through Amazon, let's say you're selling through your own website and using, let's say, Shopify, for example, to help facilitate your sales. Now we've got to look at all your sales through Shopify to make sure we collect and remit those sales taxes, which would make require you to register in many of those states. So we would look at, on a state-by-state basis, what those economic thresholds are, which are either transactional or annual revenue. For example, let's say New York listed right there. If you in the past 12 months had $500,000 of sales in New York only, plus 100 transactions in New York, not through Amazon, then we would need to register you for sales tax. It's something that we would just want to keep an eye on to make sure that you're not passing these economic thresholds in any of these other states.
Yeah, and it's something that obviously out of AVASK we take care of. So yeah, we're informing you of what the requirements are, what the different types of nexus are, but ultimately we'll be the ones that are servicing your account if you were to use AVASK. But yeah, as you can see there in that example, New Mexico versus New York, New York is 500K plus 100 transactions, whereas New Mexico is just 100K. So really, you've really got to view each state as a different country, as a different entity, and not just say, oh, well, because New York's this, that means that, every other state's going to follow suit. It really isn't the case. And it's constantly changing, as Tim mentioned at the start.
Yeah, and it's really wonderful that none of the states communicate with each other either. They like to make their laws just a little different than every other state so that it's just completely confusing for most people. But again, as Tom just mentioned, it's something that we would keep an eye on for you and keep monitoring even as the laws change so that you're always in compliance.
Yeah, absolutely. So now there is another state, Washington, isn't there, Tim? Would you care to take that one away?
Sure. The last state is Washington. Washington is a marketplace facilitator state, meaning Amazon takes care of collecting and remitting the sales tax for you. But just to be a little different than all the other states and to make things complicated, Washington also charges a local business and opportunity tax that Amazon does not collect. So even though your sales tax is being paid in, you would need to register and file a sales tax return and pay this business and opportunity tax to the state of Washington to be sure that you're fully compliant.
Yeah, so it's one of those additional states which we have tagged on to the registration recommendation on that basis, really, isn't it? So marketplace facilitator, obviously not taking into account sort of the economic side, but it's just that B&O tax that needs to be remitted. So a bit of a pain, but it's what it is.
Yeah.
Awesome. Okay. And then marketplace nexus. So we, again, just to reframe, what does marketplace nexus mean? It's where the marketplace is responsible for collecting and remitting. Tim, perhaps if you could just go through this slide.
Yeah, guys, this is just a nice visual of all the states here in the United States. And you can see that the yellow states here are where, hey, we've got to worry about making sure that we charge, collect, and remit sales tax in those 3 states. The rest of the dark blue states are, let's say, marketplace facilitator states, something, let's say, as an Amazon seller, we wouldn't have to worry about. Washington on the top left corner, we've shaded in black because of that business and opportunities tax that we've got to worry about. So we want to register and file your sales tax return in that state. But we just thought that this would be a nice visual just to kind of give you an idea of the states you want to worry about.
Yeah, I think it's a great visual just to see, how easy it is now to sell in the US. And we're going to come on to the states that we, recommend you registering in. But just looking at that visual, 3 FBA states where Amazon don't currently collect and remit. That's absolutely awesome. If you look back a couple of years ago, that would have looked very, very different. So I would say each month it gets easier and easier to sell on Amazon.com. I know it's maybe the momentum has slowed more recently, and we're sort of at those 4, 5, 6 states that you really need to worry about at the start. But yeah, what a transformation, Tim.
Yeah, again, as you said before correctly, Tom, that the rules are always changing. It's something that we're always keeping an eye on. And as you said, that map right there looked completely different, let's say, a few years ago. And, the states are always just changing their laws, coming up with new ways to tax, or at least hopefully Amazon's taking that over. And so it's always changing, and it's something, again, we keep an eye on.
Yeah, absolutely. So really just on the recap side, so selling actually in the USA, we started off with going through, whether you need to incorporate a new entity, so creating an LLC or S Corp, C Corp, whatever it might have been, or whether you want to use your overseas entity, whether that's UK, EU, wherever you might be based, you'll be able to still register. So providing you've done that and you've worked out what works best for you as a business, we then need to look at setting up some set services to allow you to, one, trade on Amazon, and two, be compliant. So this is our AVASK's recommended package, which we work very closely with Amazon on. So what we need to do is set you up for what's called an EIN number, which is an employer identification number, which is basically like a number which allows you to trade in simplistic terms. Tim, would you agree?
Yep, it helps us also register you for sales tax so that the states know who you are.
Yeah, absolutely. And then also the virtual address. Tim, what does the virtual address serve?
So the virtual address helps us communicate with the states. So just when you decide that you want to sell into the United States, we're going to need to register you for sales tax in some of those states that we just mentioned. And we want to make sure that we can represent you and communicate with those states in case any letters go back and forth or there's any communication that's needed.
Absolutely. And of course, a big tick that you need to do is set up your Amazon.com account if you haven't already. Some of you may have, some of you may not have. It's great if you haven't already because you're getting all of the tax compliance in prior. But if you have and you're worried about sort of where you've already sold, then again, speak to us. We'll then be able to advise you with, and be able to set you up as quickly as we can in the right way. And of course, part of that is registering you for sales tax. So we will obviously go through those states in just a second. But the registration timeframe, Tim, how long would you say normally that takes?
No, it could take about maybe 3 to 4 weeks for the states to get everything, all the paperwork sent, organized and responded to us so we have your sales tax numbers.
Okay. And the EIN, is that quite quick?
The EIN we can get the same day.
Okay, fantastic. So same day for the EIN, great. Virtual address, nice and quick. And then the sales tax around 3 to 4 weeks. But I suppose it depends on the state office and the demand and so on at the time. That's great. Okay. And then the sales tax compliance, Tim. So how does that work? Is it all filed monthly, quarterly? What's the status there?
So depending on the state, you can either have to file monthly or quarterly. But either way, it's not a problem for us. We have our own sales tax software that can help and assist in filing the sales tax returns. Again, you'll have a live person that you're dealing with. We're basically not a software company, which is the best thing. There's accountants here that are helping and assisting you with all your taxes on this end, sales tax being one of them, so that we can analyze your sales, get access to your Seller Central account, go through, see where you've collected sales tax, and make sure everything's filed on time and correctly. Obviously, if you guys have any questions, you want to discuss anything, talk about registering somewhere else, not sure of things, you can call us. We're here to talk to you and answer your questions, which I find is very helpful.
Awesome. Yeah, mirror that completely. So why would you pick AVASK over any other tax provider, Tim?
Tom, that's a great question. So just looking at this slide right here, guys, the first thing is we're e-commerce accountants. We've been doing this for a while. We understand the business. We understand the questions you guys have, the complexities. We're here to kind of help you and answer all the questions. What we pride ourselves on is kind of guiding you, holding your hand, let's say, through all the issues that you may run into, especially on the tax side. Let's say with bookkeeping, we want to use QuickBooks Online bookkeeping here in the U.S. to help our U.S. sellers who are looking to set up their business and get selling, but also our international sellers. Let's say you take that route and want to form an entity and sell in the U.S. Okay, so there will be some bookkeeping needs, and we can help you as well. The next thing is we directly connect to your Seller Central account. We will have access to your sales number. We have access to the Amazon fees. We have access to all the sales tax issues that you may be running into, and we can kind of guide you through that and keep an eye on that stuff as your accountants to make sure all the numbers are reported correctly. Again, we don't want any issues with the states. We don't want any issues with the IRS. Then while using QuickBooks Online, we're able to sync all your bank accounts, credit cards, any loans you have, all that stuff that you guys do to help you become great sellers. We keep track of it. We want to make sure that you guys are just focusing on selling. Let us take care of all that exciting tax stuff that we love to do. Let us take care of that bookkeeping, make sure everything's correct, give you the numbers you guys need to be able to make those better decisions on your products, marketing, all that stuff. And the last thing I just want to mention is that AVASK is a CPA company. That with CPA meaning Certified Public Accountant. There are plenty of people out there that says they're SALT experts, that they're bookkeeping experts. Those are self-proclaimed experts. CPA, we're Certified Public Accountants. We're here to help you and hopefully give you guys the right answers.
Thank you, Tim. Yeah, I think certainly from my side, obviously you're dealing with more, well, sales tax generally, but more US-based companies on a day-to-day basis. I'm dealing with more sellers that are based UK, EU, and maybe further afield that are looking to expand to Amazon.com. So we see, I suppose, different aspects of the seller journey, and I think it's really, really important to mention that people that are expanding to the US from a sales tax, from a expansion from their home country into the US, it really is much more simple than people think from a tax compliance point of view. And I'll say that we also have a great partnership network where we can get you set up. And if we don't know the answer to a question about an element of import or whatever it might be, then we've got a great partner network to be able to refer you to other people. So make sure that you do have that free consultancy wherever you are in your journey, whether you're ready to expand now with your free 6 months off. And Tim, from a sort of CPA point of view, I mean, you must hear so many different things of sellers that are really struggling with their current accountant or their current bookkeeper that just doesn't understand e-commerce. How does that differ in your opinion?
Yeah, the question or comment that I get from most sellers is that their accountant or CPA or anybody doesn't understand the e-commerce business, which is definitely true and a big thing. A couple of the issues I brought up before regarding bookkeeping and inventory, it's not the normal way to do bookkeeping. And so there can be issues when trying to file your taxes. But Tom, as you just said before, with expansion, with looking to expand into the US, you're right. It really isn't that difficult. It's actually pretty easy. Again, as long as you're talking to the right people who understand how to help you and assist you with that expansion, again, we would look to hold your hand, tell you, okay, here, we're going to register you here, here, and here, let's say just for sales tax. Now go and sell, come into the US marketplace. We're US citizens. We love to buy. We're just basically consumers. We like to tell other people what we bought and tell them where we got this good deal. Set up yourself up here in the US marketplace. It's not that difficult. We're here to help you and get selling.
Fantastic. And yes, obviously that's how to get through to either myself or Tim there. And Tim, you've got a book, haven't you, which is absolutely awesome. Would you care to maybe expand on what it covers and why sellers should be interested?
Sure. The idea from the book came from something you just mentioned, Tom, that sellers that I spoke to who kept asking the same 10, 12 questions over and over again regarding sales tax. I kept answering them, and then came up with the idea that, hey, listen, I'm going to publish a book out to answer those questions so that hopefully it could help other people who aren't sure who to talk to or to get the right answers. Again, there's a lot of information online that people may be looking at and aren't sure. Are these the correct answers to their sales tax questions? This book answers those questions.
Awesome. Okay. Well, if you want to know all about sales tax for Amazon sellers, then get the book. If you prefer to jump on a phone call, then give us a call, or obviously just drop us an email and we can talk you through all those things. Free consultancy. And of course, then we can give you a quote for expansion. Really isn't that expensive to actually expand to the US from overseas. And our bookkeeping and accounting fees are very competitive. So yeah, make sure you reach out. And that's it from myself and Tim. So bringing back Augustus or Lizette to open up the Q&A, I believe.
Yes, we have a lot of questions. And before we move to few questions which we'll manage to cover in the next 15 minutes or so, I would like to remind everyone that below in the description of this video, you will find the links to AVASK's landing page, which is dedicated to this event, to this workshop. So visit the AVASK's page, which you will find below. And if you have any query or question related to their presentations today, make sure that you use that page that they can, refer to this workshop and they will know that you are coming from this content. And now, also one more important thing, if you enjoy so far the information, and especially during Q&A, which is probably the most interesting, don't forget to click the like button below this video and subscribe to our channel. And now I think let's start with the first question. It is someone who is probably international seller in US. So is the W8BENE form is the best option for UK-based companies selling in the US?
Tom, I'm going to grab this if you don't mind. That's a nice technical question, but okay. So what is this person asking? This person's asking, hey, since I'm selling from the UK in the US, there's a US law that says Amazon, who is paying or sending money back to the UK company for selling, they have to withhold 30% of the money that they collect for taxes. Amazon has to withhold it. So what companies need to do is fill out this W8BENE form and file it with Amazon, telling Amazon, don't withhold that 30% for taxes. Give me that money. I want all my money. It's very important because, again, you can sell into the US and not have to file or pay any taxes besides the sales tax. This has to do with income taxes. So making sure that you tell Amazon, don't withhold that 30% for taxes of your revenue is very important.
Perfect. Next question. Someone is not located in the States but have a virtual office in the US. Can you qualify for S Corp?
No. Well, unless you're a U.S. citizen, even though you're outside the United States. But you have to be a U.S. citizen to qualify for an S Corp. So if you're a U.S. citizen and you live somewhere else in the world, that's fine. You can qualify for an S Corp, but you have to have a Social Security number.
Perfect.
Okay, very good. So we have another question regarding the corporation style. So as an Amazon US seller, do sellers have to register tax in the tax number in 3-4 states in which Amazon is not covering and reporting sales tax? So does the seller have to do it by themselves?
Well, what the company, the C corporation, as you have up there, would have to file for sales tax in the 4 states, let's say. Is it optional? Well, no. I mean, you should. Do all people register for sales tax in those states? No. That can cause 2 kinds of issues. One is the states can figure out that you're selling into the state and send you a bill. But the most common issue I see coming up when people don't register in those states is when they go to sell their business. At AVASK here, we help companies sell their business as brokers. And buyers who come to buy those business will ask, hey, do you have any possible outstanding sales tax liabilities? And if they see that you're not registered in those states, that can be, let's say, a blocker for these companies to want to buy your business because there's an outstanding possible liability for back sales tax. So simple answer is yes, you should register, file, and pay the sales tax in those states.
Okay, good answer. So do you have to pay income tax to IRS if you are incorporated outside the US?
No. So let's say your company is in Spain or the UK and you're just selling into the US. Then you do not have to pay the IRS any taxes. All you have to do is worry about sales tax. Again, just going back to what I said earlier in this conversation, there may be reasons why you want to incorporate in the US. If you do, okay, there's some tax filings, but still you may not have to pay taxes. Again, it's on a case-by-case basis, but simple answer, if you're incorporated outside the US and just selling in the US, you only have to pay sales tax, not any income taxes.
All right, one more question. As a seller in the US, is the list price inclusive of sales tax?
Yeah, Tom had mentioned that before, that unlike VAT taxes, sales tax is not included in the price. When a customer comes to purchase your product, the sales tax will be added to your price. So let's say you're selling something for $10 and I go to buy it here in New York, I'm going to be charged $12 when I go to checkout because sales tax is not included. I believe it's correct that the VAT is already included in the price when you go to purchase something. That is one of the big differences with sales tax. It's not included in the price.
Right. Next question. Does Amazon pay that sales tax on your behalf, even as a self-fulfilled seller?
Yes, as long as it's a marketplace facilitator state, meaning not those 3 or 4 states that we were talking about before, Amazon will collect that sales tax for you and they will pay it to the state for you. You have zero responsibility for sales tax in all those states.
Okay, very good. So when marketplace collects and pays tax for you, what kind of documents sellers can get for their accountants to prove what was collected and paid out on their behalf?
When let's see, I guess this is more of a Amazon question. When marketplace collects, let's say, I guess it would be Amazon. I'm not sure if there's not a form that they send out to show that they're paying, but it is by law Amazon's responsibility. So it's Amazon who has to prove that this tax was paid on your behalf.
Okay, and usually the sales tax, is it due monthly, quarterly, or yearly?
Good question. It depends on the state, and it also depends on what your annual revenue or turnover is. Some states just require you to file monthly. I would say most require quarterly. But if your sales in a state get to be past a certain level, and again, that all depends on each state, they will have you file and pay in more frequently so they don't have to wait for their money.
All right, more questions are coming. Let's say next one. How do we disclose tax exemption for certain states to Amazon as a US-based seller?
Tax exemption. So you would have to talk to their sales tax department to send in some kind of sales tax exemption form so that sales tax isn't charged on your product. I know there's a few products that have sales tax exemption, and you'd have to talk to Amazon to be sure that those products don't have sales tax charged on them.
All right, next question. Is DC, it's probably one of the states, right?
DC is not a state. Puerto Rico, well, DC is a state for sales tax, but Puerto Rico is not considered a tax jurisdiction.
So is DC and Puerto Rico considered as a tax jurisdiction, and Amazon does not collect for Puerto Rico? Can you explain what is DC? I'm not sure.
The District of Columbia. So where the White House is, that's Washington, D.C. It's technically not a state because they didn't want to favor which state would get the capital of the United States. So it's called the District of Columbia. But it's basically where the White House is. Sales tax is collected and remitted by Amazon in Washington, D.C. But Puerto Rico is not a state, and so that it doesn't collect and remit sales tax for Puerto Rico.
All
okay.
right.
So we have one question here. Does the location of the warehouses where the returned products are sent somehow influence how sellers have to pay sales tax or taxes overall?
That's a good question. So you're basing it on returns. No, the return products doesn't affect where you have to pay sales tax. It's always just the destination of where you're selling. I believe that's the same in VAT. It's all about destination. So really, wherever, it doesn't matter what warehouse it comes from, where your product's being delivered from. It's just where it's being delivered to that sales tax is based on.
Okay, very good. And what happens if somebody fails to register for sales tax or hasn't been collecting and remitting it?
So if it's in a state where you, the seller, have to register and collect, the states can come after you for those sales tax, meaning, all right, they're going to send you a letter, say, hey, where's your sales tax returns? You haven't collected sales tax in this state. We want that money. Even if you haven't charged the sales tax and you were supposed to, the state can still charge you for those sales tax. Sales tax is also one of the only taxes where even if you have a company formed, they can come after you personally. Now, for people outside the US, that may not be too concerning, even though I would never want to take that chance. But for those who are listening who are located in the United States, yes, they can go past your LLC or your C corporation or S corporation and come after you for back sales taxes. So if you've been selling in a state and haven't been charging sales tax, the states do allow you to file past or back sales taxes and pay that money in.
Right, we still have a few more questions. So next one is, can you bring some examples of what kind of liability issues Amazon sellers could face?
Sure. So let's say if I'm selling pens, I have a pen next to me, and somebody in the United States buys a pen and somehow hurts themselves with that pen. people in the United States like to sue. It's something we like to do. It's very easy to do. And so let's say if you're selling this pen from your UK company, we would turn around and try to sue you from there. And maybe you want to just kind of separate out your main company in the UK from what's going on in the US. So what you do is you set up a US entity and sell in the US through that entity. That would separate your UK company from any liability issues that could come up here in the US. So that's just kind of one example of how forming a US entity would shield you from some liability issues.
All right. Next one. What are the main things non-US sellers have to do regularly in order to comply with the US sales tax rules when selling on the Amazon US marketplace?
That's a great question. When Tom and I were saying before that I don't think it's ever been really easier to sell in the US, is all we have to make sure is, at least at this moment, is to register and pay our sales tax in for 4 states. So what you could do is just contact us. We would register you in those 4 states and make sure that the returns and taxes are paid in, whether it's on a monthly or quarterly basis. Yeah, we'll get you the EIN number, and basically, really, that's it, and get you moving. You get yourself set up on Amazon.com, get your account set up, and then just start selling. But for, at least from a tax perspective, it's just sales tax that really all you have to worry about to start selling from your company overseas into the US.
Okay, very good. So next question, we have a lot of questions for you. So in which cases EU-based sellers should found a company in the US and use that for Amazon business instead of using their EU-based company?
Sure. And I just wanted to say these are great questions, and I'm very happy to answer them. Again, as I was saying before, there's a lot of answers on the internet. I would say not a lot of them are correct. I hope a lot of people listen to this. These are the correct answers. These are hopefully good advice for what people should do moving forward. Again, if you're an EU-based seller, should found a company in the US and use that for Amazon instead of. So again, it's really just liability. What do I want to do? I want to separate any issues that might come up with my entity that's located in my home country: Spain, Germany, France, Italy, UK. That's where my company is. I want to sell in the United States. Do I want to sell from my entity in that home country, or do I want to just form a separate branch that's by itself? Do I want to first limit possible liability that could come to my company in Europe, or maybe I just want to, my US sales are so great, I may just want to sell my US side of the company. It kind of separates out your branches of your business as well. Some people might find that helpful, and so those are two good reasons why you'd want to form an entity here in the US instead of selling from your home-based company.
Okay, very good. And do Amazon sellers need to file tax return even if no tax is owned?
No, but it depends on each case. Even if you have to file a tax return, you may not have any tax owed. Not to get into technical, but let's say like an 1120F form. It all depends on how your company's set up. So there are a few ways, again, as I just mentioned, where you can sell into the US and not have to pay in any income taxes. Whether it's just selling from your home company, all you got to do is worry about sales tax. There's no income taxes. You can set up an entity here in the US to limit liability, still sell into the United States, and not owe any income taxes. That's where we would make sure to set up your company here in the US to make sure of that. And then now that limits your liability as well. So yes, there's a couple of ways where you can have to file a tax return and not owe any tax on the return.
Perfect. We still have 2 minutes and few more questions regarding Amazon on US tax perspective. My business, which is a foreign one-member limited liability company, should be classified as a disregarded entity or corporation. What form I provide?
So there is an IRS form. I forget the number off the top of my head, but when you're a single or one-member limited liability company, you can choose which entity you want to be. You could be a disregarded entity or a corporation. If you're a corporation, there's certain tax issues you have to deal with there. If you're a disregarded entity, there's other tax issues that you have to deal with. But there is a form that you would have to fill out as a foreign one member LLC to choose which one to file. Hopefully that answered that question. I'm not sure if they were looking for kind of a tax answer or something along those lines.
I see this is maybe a complementary question. Should it be this or that form?
Okay, so the W8BEN, that's for individuals. So let's say you're selling under your social security number or an ITIN, you didn't form an entity. You would want to provide Amazon a W8BEN so that they don't withhold 30% of your revenue or turnover. The W8BENE are for entities, the LLC, the corporation, partnership, any other type of entity. You want to send that to Amazon so they don't withhold your 30%. And just to be clear, guys, this is for people selling outside of the United States into the US. US sellers don't have to worry about this form.
You mean selling outside? It means foreign entities which are registered not in US, but they might still selling out of their warehouses in US.
Correct. Absolutely right. That's correct, Augustus.
Okay, let's take two more questions I see in the list. Lisette?
Yeah, so somebody is asking, do I need to obtain an EIN number or ITIN if my company is in Europe and I sell in Amazon US?
Yes, you would need to obtain an EIN number. So the first thing to sell in the US is we need to obtain an EIN number so that we can register you for sales tax. That's the only reason you need an EIN number. And obtaining an EIN number doesn't require you to have to file any other tax returns in the US, meaning a company or a personal tax return. We get the EIN number just to register you for sales tax so we can file and pay in the sales tax for those 3 or 4 states. That's the only reason you would need that number.
Okay, very good. And I think that's the last one for now. So what are the service fees for founding company in US, tax filing, and other possible services associated with operating business in US?
So we'll send out our fee schedule at the end of this presentation. There are a couple of different fees here. I won't go through them all, but as Tom mentioned, they're very competitive, and everything that's listed in that question we can help and take care of for clients.
Yes, and as I mentioned earlier, you will find the link below in the description to the landing page of AVASK related to this workshop, and any follow-up, inquiries. You want to present your detailed situation. You are open. You are what's the word? You are welcome to fill out the form found in that AVASK page. You will find below in the description and sometimes in the comments on your right side. So now, Tom and Tim, thank you very much for covering the US sales tax section and part. And we will see Tom later. And also Tim will be answering your questions in the last final Q&A in the 4th hour. And now we will be shortly going to the second part, which will be about EU and VAT tax. All right, so now it's a part 2, and in this part we'll be talking about a very complex, almost 30 countries continent, Europe, with a lot of different VAT regulations and tax and compliance regulations and rules.
And most importantly, we will talk about updates to the current system. So we are even adding additional layer on that topic.
Yes, and again, if you like the content you hear, don't forget to press the thumbs up button below the video. Also subscribe to our channel, and you will find the links to AVASK landing page below in the description. So if you have additional questions or you want them to analyze your situation, feel free to fill out a form there. And for EU tax, and there will be also topics covered about import, export into EU. We have two other experts from AVASK. So it's Toby and Alex. Toby is expert in import and export, import, export, and Alex is knows a lot about VAT compliance and the rules. So the stage is yours, and you're welcome to introduce yourself and go with the presentation.
That's brilliant. Thank you very much, Augustus. And that was a very enjoyable first hour talking about the US there. So myself and Alex are now going to talk about EU, VAT, customs, and the new changes. So I'm Toby. I'm working at AVASK in the Customs and Trade Department, and we're all about helping sellers move their goods between or into the UK and the EU and through customs borders smoothly. I'm going to hand over to Alex to introduce herself now.
Thank you, Toby. Hi, everyone. My name is Alex. I am the Senior Team Leader at AVASK Accounting. So as Augustus already mentioned, I mainly focus on the EU VAT laws. So we're going to be going through the Brexit changes, which I know everyone has recently been getting involved with, as well as the upcoming changes from July 1st and how that's going to work with your businesses.
Thank you very much, Alex. So just to run through what we're going to be talking about, we're going to go over Brexit and introduce the main VAT changes. We'll go into customs representation. What is it? Who needs it and why? And also look at how you can import goods both into the EU and the UK and how that's changed due to Brexit at the start of the year. We'll go through the one-stop shop and the changes coming in July the 1st. And we'll go through a Q&A at the end. In the meantime, if you do have any questions, please put them into the chat and we will answer those as we go along and also at the end there. So to start with Brexit, a summary, just looking at the last 18 months and how we've got to where we are. So at in January 2020, the UK was no longer a member of the EU. There was many meetings and we entered a transition period and this ended in December. The transition period ended and the UK and the EU agreed a late deal. The deal was announced right at the end of December, which didn't really give too much preparation to transport agents, sellers, and in fact anyone to really come to grips with the changes and get used to it. So I think the first start in 2021, it's been taking a bit of time to adapt to the changes, but we are now starting to see some clear established methods of getting your goods into the UK and the EU, which is what we'll look to explore. I'm going to hand back to Alex to go through some of the EU VAT changes.
Perfect. Thank you, Toby. Yes, as Toby mentioned, the transition period was an area of reflection for everyone, for us to see how we're going to work with the UK leaving the EU. The current VAT registration requirements are that if you are storing goods in one or more European countries, that triggers a requirement for EU VAT. Where you have stock is where your requirement for VAT is enabled. If you're selling goods from an EU warehouse to another EU member state and you breach a distance selling threshold, for example, you're selling your goods from France to Germany and your goods breach 100,000 into Germany, they begin being taxable in Germany. That would trigger a VAT requirement. And if you're importing goods into an EU country from a third country or territory, and you're that importer of record, you'll be seen to own those goods as they are in the EU. So these are the current requirements that trigger that EU VAT requirement. Perfect. So from the 1st of January, what happened? The UK stopped being an EU member state and part of the single market. We saw the UK removed from the EU entirely. It stopped the free movement of goods between the UK and the EU. The new customs border was introduced between the UK and the EU, and import duties were introduced on both sides of the channel now. The UK is now classified as a third country in relation to the EU. It's seen exactly how it is for the US, for India, for China. The UK is now completely out of the EU. And the new regulations to control the UK and EU trade have been introduced, which we're going to go through today, and how that they have changed the way companies trade with UK and EU. Perfect. So what do you need to sell in the UK and the EU? The first and most important thing is your EORI numbers and your VAT numbers. So you have to have one in the UK and you have to have one in the EU. Previously, you could have one EORI number for the EU, and that included the UK. You could ship to the UK, you could ship to Germany, France with this one EORI number. The EORI number allows you to clear your goods into that country. Having those two EORI numbers is now essential for you to get your stock into the UK for the UK one and into Europe for the European one. And a VAT number allows you to trade successfully in those countries in order for you to be compliant, file your VAT returns accordingly. So these are the two most important things to start that transition to selling either in the UK or the EU and to get those stock into those countries. So what are the main takeaways for sellers as a result of Brexit? You have to register for both the UK and the EU VAT numbers. You have to register for the UK and EU EORI numbers. Speak to your shipping provider about splitting your inventory between the UK and the EU markets. Previously, a lot of sellers were shipping their goods into one EU member state, whether it be the UK, whether it be Germany, and that stock was facilitating the whole of the EU. Now that the UK has been removed from that scenario, you're going to have to look at shipping your stock and separating it between the UK and the EU, whether that be you ship to the UK and you ship to France or you ship to Germany. You need that separation now because that movement of goods isn't going to happen. Amazon or whatever marketplace you're selling on aren't going to move those goods between those countries anymore. And to find a 3PL solution if that's needed. The customs borders we saw got very busy when Brexit hit. Everyone was trying to get their stock in. So a lot of people was like, okay, I'm going to try and get as much stock in now as possible so I have less worries about shipping into in the future and I have that good amount of storage available in those countries. So these are some top tips we'd say for sellers to take away as a result of Brexit so far.
Brilliant. Thank you very much there, Alex. And I think some really good points. I think especially the planning and with the 3PLs you're saying is, I think with Brexit, as much as we didn't get too much notice, I think what we can do in order to smoothly trade is to make sure everything is planned and prepared in advance. So I think with your shipping, if you're looking at shipping into the UK and the EU, find out how much you need and planning in advance with your transport providers what you're going to need is really important. Just to go into a bit more detail now about the EU and the UK trade agreement. What is it? As mentioned, it was announced very late in December before Brexit, the trade deal. And essentially, it's the end of free movement between the EU and the UK. So goods freely would just move from the UK to Germany, or France to the UK. Absolutely no issues, no customs border or really too much to think about. And that has come to an end. As there's now a new customs border between the UK and the EU, goods will have to have customs clearance. They'll need both export customs clearance in the country of export and also import customs clearance in the country of import. And it's really important that when you're moving goods into the EU or into the UK, that you're aware that these customs clearances are going to be needed, who's going to be completing them for you, and that there's enough information there to get them sorted. The deal was that UK and EU goods can move between the UK and the EU without any import duty. So to speak, if goods are originating in the UK, when they are imported into the EU, you can get preferential import duty rates, so 0% duty rates. This works the other way as well. So if goods are moving from the EU to the UK, there would be 0% import duties. You may need to prove the origin of these goods, and that could be done by a certificate of origin, or it may be that you require a registered exporter number or REX number. So going through the new requirements when selling in the EU, you'll need now an EU EORI number and a UK EORI number. You'll need at least one EU VAT number in order to sell in the EU. You'll need the customs declarations as mentioned, so you'll need import and export customs declarations when your goods moving through a customs border. And you will need indirect and direct representation, which I know has been a key feature at the start of the year, and clients are getting confused between the two, what it actually is and why it's needed. To go through those in a bit more detail, so direct representation is where the importer or exporter will give information to the customs broker. The customs broker will complete the import or export declaration, but ultimately all the liability remains with the importing or exporting party. This is the most common type of representation, and it's normally used where possible. The EU and the UK will require only direct representation when the importer has a physical company in the EU. So if you're based outside of the EU, or if you're based in the UK now, when you are importing into the EU, you may not be able to use direct representation, which is catching out a lot of our sellers. So moving on to indirect representation, this is where the information is passed by the importer or exporter to the customs broker, but the customs broker remains jointly liable for the information on the declaration and the customs debt from the customs declaration. As there's additional liability, a lot of transport companies and customs brokers will stay away from indirect representation and will only offer direct representation. This has been a key reason why there's been a lot of trouble at the borders, and especially at the start of the year. And it's really important that before you're sending your shipment, you're aware if you require indirect representation and if your customs broker is going to be able to provide that to you. If not, you may need to appoint a third party indirect representation, such as AVASK, who can assist you with these shipments. So a bit more going on into importing into the EU, you will require a customs broker to lodge an import declaration for your shipment. So before Brexit, the UK was still part of the EU, so the UK companies would be able to import under direct representation. And it's really important that now you make sure that you are aware if you require indirect representation and confirm with your transport company. I've seen a lot of sellers who have been looking to send inventory from the UK or the US into the EU, and it's only been when the goods arrive at the customs border and the broker tries to clear it and realises they're not an EU company, and this causes issues with the customs clearance. So really important to check this prior to shipping, and all about planning to make sure that your goods can essentially go from where they're departing all the way to their final destination. It is worth noting that different countries in the EU have slightly different procedures for importing through customs, and definitely clarify prior to shipping with your transport provider or customs broker to make sure that they can offer you everything that you do need in order to import into the EU. The UK, much the same in terms of you will require a customs broker to lodge the import declaration when your goods arrive. Worth checking with your transport provider if they can clear your goods in the UK, or if you are going to need to appoint a customs broker who can clear your goods via indirect representation. The UK has also, since Brexit, had the benefit of postponed VAT accounting, which, of all of the hassle and delays we're seeing with customs, is definitely one of the better things that we've had since the start of the year. So postponed VAT accounting, or PVA, anyone registered for VAT in the UK can apply for this. And essentially what this allows you to do is postpone the import VAT. So when the goods arrive at the border, you don't have to pay this up front. You can defer this to your quarterly VAT return. Usually you can reclaim this at the same time, meaning no real payment is required. And definitely something that all sellers should be jumping on Cash flow, it's really good. Transport providers are all able to use it. You just need to inform them that you want to use PVA for paying of the import VAT. As I said, for a shipment, say it was coming into the UK and you were saying having to pay 10,000 of import VAT up front, that's a big amount of money where you can defer it onto your quarterly filings. Really helps with cash flow, and essentially there's no charge for using it. So definitely something that is worth using if you're not already. Just going back accounting. So before shipping, and this is essentially moving back to where we said before you ship, it's really worth checking with your transport company and making sure that all the documentation is correct. I'd say much over 50% of the shipments that are stuck in customs are due to the wrong documentation or issues with their documents. So when you are making a shipment, one of the first steps is once you've appointed a transport provider is that you will need to provide them some documents in order so that they can move your shipment. So some of these documents will include the commercial invoice, the packing list, and potentially a country of origin certificate. These are documents you need to provide. So it may be that you can get a template from your transport company, but it's important that you fill these out to the best of your knowledge and make sure that you give your transport company all the information they require to clear the goods at customs, as they will be using these documents. The most important, I'd say, out of all of these is the commercial invoice. And this really is the key to getting your goods from A to B successfully. There's lots of templates for commercial invoice, and I think for Amazon sellers, really important that you list as much information on there, as the transport broker will use your commercial invoice in order to complete the import declaration. So if it doesn't have the information on there, it will result in a case of it being delayed. I think when we look at the likes of courier companies or fast parcel, where there's hundreds and thousands of shipments in a day, if there's not all the information that they require on the commercial invoice, it may not get cleared straight away, and that can cause delays. So just going through the commercial invoice, and I'm not going to go through every single aspect that you'll need, as there are different templates depending on how you're shipping. But these are some points that will really need to be listed on the commercial invoice. And I'd say clearly listed, not just putting it all in in sort of a jumble. You can clearly list these in parts. It will help your goods get through customs clearly. So I think the exporter details, who is the exporter, if they're an UK or EU company, includes the UK or EU EORI number. I think the importer details and the delivery address are really clear, and if these two are different, it's really worth making sure that these are listed clearly. This happens a lot when you're sending to a warehouse or an Amazon warehouse, where if it's not clearly listed that Amazon is just the delivery address and they are not the importer, the shipments can get stuck for a while, as the transport company is not sure who the importer is and who to contact in order to assist them with clearing customs. So with the importer details, if you're importing into the EU, please include the EU EORI number if you're and the VAT number you're going to, and the full details. Delivery address, likewise, include that. We get a lot of questions about Incoterms, and I think when you are shipping and you're looking to pay all of the import duties and VAT to reclaim them, the DDP Incoterm is what we would advise using when you are looking to stock an Amazon FBA warehouse or other warehouse. There'll be lots of information on your goods that you'll need to include on the commercial invoice. So for each one, you'd need to include the value of the goods, the commodity code of the goods, country of origin, and the number of units. With regards to the commodity codes and the country of origin, these will be very useful when determining how much import duty you will have to pay. So when the goods are imported into, say, the UK or into the EU, import duties and import VAT may be payable. This will depend on both the values, the commodity codes, and the country of origin. And it might be best to give an example for that. So if you're looking at commodity codes, say we're importing two products from the same country into the UK, there'll be different rates of import duties depending on the commodity. For example, if you were importing from India and you were importing T-shirts and sandstone, you would not have any import duty when importing into the UK, but T-shirts you would have a rate of duty in the region of about 8%. So different commodity codes will have different import duties. Country of origin, and especially with the UK-EU trade deal, it's something which is definitely worth discussing. So again, the same products can have different import duty rates depending on the country that they originate and what trade deals they have. So if we look at the T-shirts, if they were being imported from India and they were of Indian origin, they would have 8% when coming into the UK. But if they were coming from the EU to the UK and the goods could be proven that they were of EU origin, there would be 0% import duty when coming into the UK. So really important that you put the correct commodity codes and countries of origin on your commercial invoice, and you provide this to the transport provider. I'm going to hand back to Alex to go through the one-stop shop and the key changes coming up.
Thank you, Toby. Yeah, it is a tongue twister. So thank you, Toby, for going through obviously some really important information on customs. I'm now going to be discussing, as Toby mentioned, the one-stop shop changes that are coming into place from the 1st of July. So as you might have all heard, there is a new EU package that's coming into place from the 1st of July 2021. It was meant to come into place from the 1st of January 2021, but due to delays and not all countries being ready, it was postponed. So it's meant to take place from the 1st of July 2021. And it's going to really streamline the EU entirely and have everyone on a more level playing field, and is aiming to combat a lot of VAT fraud. So it's very exciting times that are coming up. So some of the changes we are seeing come into place from the 1st of July is the introduction of the OSS, the one-stop shop. This is an extension of the current mini one-stop shop, which is for digital supplies only. So this is the one-stop shop, which is more of a universal package. I'm going to go into more detail on that later on. Abolishment of distance selling thresholds. So I can see people in the comments talking about, how do I track my distance selling thresholds? How do I know how many sales I've made from one country to other countries and everything? And that's a very, very good question. And I know for a lot of sellers who maybe don't have that dedicated VAT accountant, it can be quite a burden upon them when they want to focus on selling. So as we're entering into the new phase from July, we are going to see those distance selling thresholds removed. The distance selling thresholds are in place due to the current place of supply being where your sale is fulfilled from, and that is being changed from the new rules, with it being the place it's arrived to. And that is why that distance selling threshold requirement is being removed, because it no longer stands under the new rules. So I'll go into that a bit more later on as well. So B2C businesses may not be required to register for multiple VAT numbers subject to their business model. This is such an important factor because at the moment, wherever you have stock or wherever you breach, then you have to have the VAT registration. As entities get bigger and bigger, we can really see them breaching in many, many countries, Belgium, Austria, Ireland, loads of countries such as that. And that is triggering that VAT requirement and further compliance, which can be burdens upon sellers who don't have that dedicated VAT advisor. With the removal of the distance selling thresholds, we should see the amount of countries people have to register in slow down a bit and just be where they have stock. So wherever you have stock is where that VAT number is applicable to. Abolishment of the VAT exemption for low value consignments. So there's going to be a new scheme into place for those sales that are going straight from the US into Germany, into France, and they can all be declared in that one IOSS return moving forward. So I'll go into that in a bit more detail also. And the really exciting one, which I know a lot of our viewers today are American companies, and you should have seen this already, of the Amazon collecting and remitting and online marketplaces collecting and remitting. So that's now going to be introduced into Europe. It was introduced into the UK from the 1st of January. So when Brexit went through, it was introduced in the UK, and we're now going to see that come into place in Europe from the 1st of July as well. So we're just going to be going through all of these changes in a bit more detail. So the first question of what is an OMP? An OMP is any electronic interface that facilitates a sale of goods to an end consumer. It sets the general terms and conditions, it authorizes the charge of the customer for payment, and it involves the ordering and delivering of the goods. Take Amazon, for example. Amazon is one of the sort of big leaders in the OMP market at the moment. Amazon is considered an OMP. All three of those conditions are covered in Amazon. So Amazon are now responsible for that declaration of that sale. Currently, if you were to make a sale from Germany to France, it would be your requirement to declare that VAT. Now, this is being introduced purely for non-EU businesses, where if you are making that sale from Germany to France, it is now Amazon's requirement to declare that sale. You are selling to Amazon now as opposed to your consumer. So your sale from Germany to France is being changed. It is now going Germany to Amazon in Germany, and then Amazon are doing that sale. So it's Amazon that have to collect and remit that VAT. You are now making a zero rated sale to Amazon as opposed to a taxable sale to your consumer. So that is the OMP and how it's going to be working. So a bit, just how I mentioned, a bit more detail on how this OMP scenario is going to work. The OMP will be the deemed supplier, as I mentioned, and it will apply in the case of consignments with an intrinsic value not exceeding 150 euros, supplied and imported to a customer in the EU, as well as sales of goods already imported into the EU and circulating to another customer base in the EU. So like I said, you've got that US to a German seller, German company, and less than 150 euros, Amazon will be responsible for that collect and remit scenario. You still have to declare VAT returns. You still have that VAT requirement if you've got stock there. It's Amazon's requirement to declare those sales. And then the EU option that I mentioned of Amazon are taking ownership of that item when it is in country, and it's their responsibility to collect and remit that VAT on that sale now, which really eases, I think, the worry on a lot of sellers. It still keeps, which I think is a very common myth and misconception, it still keeps your VAT requirements and your duties to declare what Amazon or eBay or wherever you're trading, you still have to declare everything. But that cash flow aspect of, okay, I've received my funds, I don't have to worry about setting 20% aside for my taxes because most of it is coming from Amazon now, is a great advantage for those non-EU companies who can benefit from this package. Perfect. So we're just going to go through some OSS illustrations. I completely appreciate that there's some different scenarios with different factors, non-EU company, EU company, where are my goods, that can really change the way people can view this illustration. So we've got a few illustrations for you just to run through some examples. So for example, you're a German entity or any European entity, and you are making sales via Amazon Pay and Use. You've got that stock in all those 7 different countries, and you're making sales upon your own website. Your domestic sales are to be declared in your domestic return. And what is a domestic sale? That's any sale that is going to the same country. So a sale that goes from your Polish warehouse to your Polish customer, is a domestic sale. That would be declared in your Polish VAT return. Distance sales, so example of Poland again, Poland going to France, that is a distance sale. If your OSS country, so your one-stop shop country, is Germany, that's declared in your German one-stop shop return. The one-stop shop return is eliminating the need to declare distance sales in all these different countries. It's eliminating the need to review those distance selling thresholds. So up until now, you have all your sales fulfilled from Poland, you're monitoring those distance selling thresholds, you're keeping track of all that information. That's going to be removed. Local sales are declared in the local VAT returns, subject to where the sale is going to and from. And all of your distance sales will be going in that one-stop shop return. You don't have to worry about where those sales are going anymore. They're always going that one-stop shop return. And it is the tax office's responsibility to split those the VAT received in that one-stop shop return to the relevant tax office that it's due to. So you're filing your German one-stop shop return because you're a German company. As a German entity, you must register for one-stop shop within Germany. It is then filed to the German tax office, your one-stop shop return, and it is then the German tax office that say, okay, these sales went to Italy, these sales went to France, and it is their duty to then relay those funds to the tax office, therefore taking that burden off of sellers of having to register under many different countries, because the new rules meant that any sale where you were sending a good to, it is now taxable in the arrival country, which changed the scope a lot because it could mean you would have to have VAT registration in, say, 27 different states, as opposed to currently where it's where a sale is fulfilled from. So that's where the big changes come into place and why they introduced the one-stop shop. And this illustration really shows why the tax office have done what they have done. And they've simplified the need for those distance selling thresholds, but as well as simplifying the removal of the distance selling thresholds, they've made it work by having to file that one VAT return to solve that method. So this is an illustration for an EU entity. As I mentioned earlier, EU entities aren't subject to the Amazon collect and remit. So all of their sales are either in the one-stop shop return or in the domestic VAT return. They still have to collect and remit their sales accordingly from the tax office. It's just where those sales are being declared that is now changing for those EU entities, whilst removing that need to review and action on any distance selling threshold breaches. Perfect. So going on to a non-EU entity examples, we have two examples for the non-EU entity, and I'm sure you'll see why. So if we take a US company, it makes sales via Amazon Pan EU only. You have stock in 7 countries around Europe. You'll have your stock in Poland, Czech, Germany, France, Italy, Spain, and obviously UK, which has recently left the EU market. At that stage, you would have had to have all of those VAT numbers where your stock is held, because wherever your stock is held is where your sales are leaving from. Due to place of supply rules, those sales are subject to the country of departure and where they were going to. Obviously, again, subject to those distance selling thresholds being breached. As the company is based outside of the EU and only makes sales via an OMP, it is the OMP that is therefore responsible for every sale that company is submitting, any B2C sale that company is making. There is no OSS requirement in this scenario. The reason being is what I mentioned earlier of Amazon taking ownership of that sale whilst it's in country. Currently, at the moment, it is the company monitoring those thresholds, monitoring those rules. But as if the stock is in the Polish warehouse, Amazon take responsibility of it in Poland. Amazon make that distance sale. So under the PAN-EU program now, non-EU entities are not making distance sales because it's Amazon who are taking responsibility of that sale whilst it is still in country. And that is why there is no OSS requirement in this scenario, because there are no distance selling that is occurring. There will be local sales occurring, say Poland to Poland. So you still need to keep hold of those VAT numbers in all those countries you have stock. Still, wherever you have stock, you still have to have that VAT requirement. That doesn't change. So if you're PAN-EU, still keep hold of all of those 7 VAT numbers, still file VAT returns. It may be that Amazon have collected and remitted all of your sales for that month. However, you still have to submit other information. A VAT return isn't just the VAT due. So that requirement to still be VAT registered and file is still there, but it's likely you'll see a large reduction in VAT actually submitted on your return, because Amazon have become responsible for that. So you declare your sales largely at 0% VAT because it's Amazon who are taking that over. So that's an example of a non-EU entity. So if we could go on the second one, if that's okay, Toby. Perfect. So our second example is a US company who is making sales via PanEU as well as their own website. So looking at that first half scenario of PanEU only, as we know from the earlier example, that does not trigger an OSS requirement because there is no distance selling occurring because the OMP becomes responsible for the sale in country. When we have website sales added to the equation, we will see this development of OSS needed within this scenario. The reason being is it's website sales. There is no one collecting and remitting. So it is the company itself who is doing the distance selling, which is why we see this scenario need the OSS requirement. So it would be the VAT advisor who's in charge to keep track of where those sales are going and coming from, making sure you still have that VAT number where the stock is held, but then this distance sales will be declared in that one-stop shop return, similarly to the EU company who doesn't have the OMP collect and remit. It's the same principle when we go to a marketplace who isn't an OMP. So that sale on that website isn't responsible. It's not OMP collect and remit. So that same scenario applies of you needing to declare the one-stop shop return for all of those distance sales for that website. So that's the sort of three illustrations we can really see where we see how OSS is different based on every single business scenario. Perfect. So yes, that's just some more examples off the back of that illustration I've just done. So your stock is held in Germany. Where is it going? Germany to Germany, France to France. It allows us to see where those sales are subject to VATs. That's just a further example of what we've just touched on. So IOSS, so it's a slight addition or change, I say, to the one-stop shop. So the one-stop shop is for all of those EU to EU sales that are occurring. Where IOSS changes, it is a tongue twister. I warn everyone who has to start using it, is the import one-stop shop. An import is where a sale is going from outside of the EU into the EU. So these are for those sellers who are making those sales directly from their warehouse, say in the USA or in India, or trying to direct to their consumers in the EU. This is where this is applicable to you. So a lot of people who are using those MFN functionalities, that merchant fulfillment, where you are delivering those goods direct to your consumers from outside the EU, this is where your package comes in. So there is a specific package dedicated to yourselves. So likewise, if we were under current rules, without the one-stop shop and the new law was changing to VAT based on the place of arrival, and you were sending your goods from the USA into all those different European countries, and the tax requirement was where the sale was going to, you would be triggering those multiple VAT requirements again, which is why they've streamlined into this import one-stop shop. So all of the sales will be declared in one import one-stop shop VAT return. So as we mentioned already, the VAT is not chargeable upon the border. However, VAT must be charged to the end consumer according to the VAT rate of the destination country. The import one-stop shop and the one-stop shop for non-EU entities, you can pick that country of establishment where you choose to register for one-stop shop. You have to register for one-stop shop in a country. It should be the country where your goods dispatch from. If you have multiple countries, in that case, you can select. And I recommend selecting subject to your business model, subject to languages, subject to turnaround with the tax office, subject to feedback you've heard from the tax office. Are they responsive? Are they cooperative with you? As well as deadlines. Some countries file quarterly, some file monthly with the domestic VAT return. So keeping an eye for that information as well to really find the best IOSS or OSS country for you to establish yourself in. So in this example, the seller is registered for IOSS in France. Import VAT is not chargeable upon the border, and the sale will be declared in the IOSS return in France rather than on that case-by-case basis. So similar to the one-stop shop, but for those imports, not goods between the EU. It's outside of the EU into the EU now. So what are the next steps? So I've just flooded you guys with loads of information, and you just want me to tell you what's next. So if you are based outside of the EU, so a non-EU business, register for the non-union scheme in any EU member state to access that OSS system. Like I said, it should be the country where your goods are dispatching from. Cancel VAT registrations that no longer apply. Where you are VAT registered purely due to a breach, you do not need that VAT number anymore. You only need a VAT number where your stock is held. That breach has been removed entirely, and you just need where you've got that VAT liability, which is where that stock is. Keep your VAT registration where your stock is held, and ensure any backdated sales have been previously declared, as OSS will give visibility to all sales. This is a really key function that's coming into place. The OSS is opening the board to really combat VAT fraud. All countries are going to be able to see all sales. It's really going to give the EU market visibility on sellers and on their sales. And it's going to be a real development and a curve in the way VAT fraud has been handled so far, because that visibility has been opened up now. Perfect. So how can AVASK help your business? Ensure you get correct representation to move those goods successfully. When you're expanding into Europe, get those goods into the UK, get those goods into Europe, and we can really help with that as well. So if you are looking to move your goods around, please get in touch with us and we'll be happy to talk through any of those questions. Discuss your VAT requirements with your dedicated tax advisor. This is super imperative. As I've gone through already, especially with the changes that are coming into place from July, it is on a case-by-case scenario. Having the most important tax advice is key here to ensure you are acting in the correct way with the new changes. The new changes have been said to really simplify things, and it is simplifying things in some perspective. However, at the same time, it is creating and upping that requirement and duty to do things correctly and by the book and in clear, concise manner. So ensure you've got that dedicated tax advisor to let you know what your requirements are, to ensure your VAT returns are filed correctly, and get a UK and EU EOI number. As both myself and Toby have mentioned, this is imperative when selling into the UK and EU. You almost can't do anything without it. This is one of the most important things I could relate to any seller, is get that UK and EU EOI number. You can't sell if your goods aren't available. So really focus on those two and get those numbers. That's imperative. So lastly, I believe we're going to get on with some questions.
Yes, sure. We have a lot of questions related to Europe, and let's start with the first one. Can I use my sole proprietorship entity in Canada to start importing and selling in EU and UK, or do I need a new entity?
No, it is absolutely fine to use that entity. You can by all means sell into Europe with your Canadian proprietorship. That's no problem at all. You can sell with any entity.
And what kind of requirements this person with his company has to fulfill in order to be compliant in Europe?
In order to be compliant, you need to have the VAT registrations where your VAT requirements are triggered. That requires certain information to get that VAT number, your passport, your certificate of incorporation, to first establish the VAT numbers in whatever country you are required to. Thereafter, having that dedicated tax advisor to submit your VAT returns, ensure all your sales are submitted correctly, is the most essential part, as well as ensuring your goods can be moved around successfully with the right documents and by the book, and ensuring you're not overpaying VAT. You can reclaim that import VAT. Have you sent through those invoices? What sales are 0% or reduced rate? So it's no issue at all what entity you are, where you're incorporated, or anything like that. But the most important thing is you have that requirement fulfilled and you are compliant in those relevant countries where you need to be.
Yeah, it's quite a complex situation for each country, and Yeah, so best also one more time I want to remind that everyone who is watching and want more in-depth help from AVASK, you will find the link below in the description, also sometimes in the chat box on the right side. And in the link you can visit the AVASK's website landing page, where there is a form and you can fill out and present your situation, and they will be happy to help. And we have a few more questions, of course, and some questions might be relating to already what was presented, but it's good to repeat. Let's see what's next. What Incoterm we should use for importing goods to the UK as EU-based company with UK VAT number, and AORI to the Amazon warehouse as FBA?
Thank you, Augustus. I can take this one. So with Incoterms, especially when sending to Amazon, I'd always advise sending DDP, delivered duty paid, when possible. When sending to Amazon, Amazon won't act as the importer and won't pay any import duties and VAT. So sending via DDP gives all of the responsibility to the sending party for this. I would also advise make sure the documentation is correct, even though you're sending DDP. If it looks like Amazon is the importer in the UK, if you haven't listed your UK EORI number, you may have issues at customs. So I'd send DDP, but that's not the only requirement in order to get your goods through successfully.
All right, we have another question. So is it impossible to ship stock directly to Amazon Fulfillment Center without involving any import partner?
Okay, so on this one, you can ship directly to an Amazon fulfillment center. With not involving any import partner, it will depend on where the goods have gone from and to, and I invite them to get in contact. We can discuss this further. If the goods are crossing a customs border, so if they're coming from outside of the EU into the EU, or outside the UK into the UK, there's going to need to be export customs clearance and import customs clearance. So you will need a broker to clear that. It could be that the transport company offers the customs clearance as well. So it's definitely worth checking that. If your goods are moving, say, from the EU already to an FBA centre inside the EU, they wouldn't be going through any customs borders, so the goods would be able to move freely. So it would slightly depend on where the goods are coming from and to, but in the majority of cases, you will need goods to go through customs.
Okay, thanks. So as a UK seller using the European fulfillment network, if Germany is the primary storage warehouse, then is VAT registration required in any other EU region?
So there's two ways to answer this question. Currently, so pre the 1st of July 2020, possibly. If you've only got stock in Germany, your first requirement comes from that stock. If you are sending goods from Germany to lots of other countries, then it's dependent on if you've breached any distance selling thresholds. So say your goods from Germany to France breach 35,000 euros. If your goods from Germany to Spain breach 35,000 euros, then you would be triggering that requirement in that other EU member state. Moving into the 1st of July 2021, no, your VAT requirement will only be your German domestic VAT return, so a normal VAT return, as well as your one-stop shop VAT return, subject to if that is your sales that are fulfilled from Germany still. So if you have those goods and they're fulfilled directly from, say, your own website, directly from Germany to other EU countries, they would be declared in the German one-stop shop return as they're a distance sale, and your Germany to Germany sales will be declared in the German VAT return, and you don't have to worry about those distance selling thresholds. So there's two ways to answer that question. So I hope I covered them both.
Yeah, you did perfect.
All right, next one. Apart from customs and VAT, what other tax issues should we consider in Europe?
So there's, again, two ways to answer this question. As an EU company, obviously you still have your income tax, your corporation tax you have to take into consideration. As opposed from that, from your non-incorporation country, you shouldn't have to worry about anything else. You worry about your import VAT at the border, you worry about your VAT on sales. So the only difference should be where you're incorporated. And the same principle applies to a non-EU entity. So as long as you're all good in your non-EU incorporated country, your EU, you should just have to worry about that import VAT and that VAT due on sales. Making sure you're reclaiming your import VAT when you've charged it and offset that against the VAT due on sales. Making sure you're charging the relevant VAT rate to the correct country. Making sure it's declared in the VAT return. Currently keeping track of those distance selling thresholds. So non-incorporation countries, you should only have to worry about that customs VAT and getting your goods in and the VAT due on your sales.
Next one, do you have to register for VAT in the UK and EU as a new seller and turnover is less than £85,000? As we know, in the kind of last year rules, if you have 85,000 or less revenue, then you don't need to do with anything with VAT in UK, right? So I think it's referring to this.
So that's if you're a UK incorporated entity. So you have that VAT waiver essentially. So you don't have to declare VAT on that first £85,000 worth of sales. If you have got sales taxable to EU VAT, you have to declare that regardless if you're an EU company under the £85,000. The £85,000 is UK company, with UK tax requirements. So if you're a UK company with EU tax requirements, that doesn't fall under that £85,000 restriction. Likewise, if you're a non-UK company with UK tax requirements, you don't adhere to that £85,000 threshold because you're not a UK incorporated entity.
All right, so we have a question here. So if I have imported the products to UK, but the C79 form is not coming for already 4 or 5 months, then could it be requested separately as well?
Okay, perfect.
No, I can take this one. So you can request a duplicate C79 from HMRC, but what I'd suggest is 4 to 5 months does seem a long time for it not to turn up. So it would definitely be worth getting a copy of the C88 document, and the transport company should be able to provide you with this. What that will list is exactly who has been listed as the importer on the import declaration. And it would be likely, if you haven't received the C79 form after 4 to 5 months, that it may not have used your UK EORI number on the import declaration. So what my advice would be is to obtain the C88 document first of all, check that's got all of your details on, and if it has, then request a duplicate C79 from HMRC.
Okay, that's good advice.
So another bit onto that actually as well.
Go ahead.
Which is great what Toby said, but also I would recommend that if, for example, you're an American entity and you don't have a UK representative or an agent in the UK, then we do sometimes see that delay. 4 to 5 months is quite extreme, but we do see a delay because the C79 has to go from HMRC to another office within the UK to overseas. So having that agent such as AVASK in the UK can really be beneficial because the C79 comes directly to our office, and then you see the receipt of the C79. So like Toby said, if everything's been cleared correctly in the shipment, received in about a month, which is the standard time, and also referring to PVA that Toby mentioned earlier, you can really avoid that worry of having to wait to receive the import VAT reclaim from the C79 because you haven't paid it in the first instance, so there's no C79 to be received. So there's some good sort of takeaways from that.
Okay, very good. Yeah, thank you very much for adding that information as well. So regarding next question, considering the pan-EU FBA program, Amazon moves inventory to store in various countries. So would a VAT number would be required in every country Amazon is authorized to store the inventory?
Yes, so you would have to have the VAT registration in all the countries. That is the same post July and pre-July. So wherever you have stock, you will always have a VAT requirement. Like you said, Amazon Panny, you've got Poland, Czech, Germany, France, Italy, Spain, and obviously UK. That requirement remains the same. You always have to have stock where, a VAT registration where you have stock and be fully compliant and declare those filings.
Yeah, it's getting confusing with all these changes, and it says the one-stop shop, but you anyway need registrations in some cases. Okay, a few more questions. So we have many more than what we will be able to do in the next few minutes. Those who will not get the answers, please check the 4th hour of this workshop where we will go through the remaining questions. So the question is, what about UKCA? I'm not sure what is that marking when importing in the UK. Could you go into details about that?
Yeah, so I'd suggest to who's asked this question maybe to get in contact with us directly. The UKCA marking will depend on different types of products, and we maybe need to look at it in a bit more of a case-by-case basis. So it may be worth getting some more information, and we can go into that in a bit more detail to find out exactly what they require.
Perfect. Another question about C88. Who is providing this form, and is it the exporting custom clearance agent?
Okay, so the C88 document is for the import declaration into the UK. So it will be the customs broker or the transport company, whoever has completed the import customs clearance will obtain a C88. They should receive that as soon as the goods have cleared customs in the UK. So they should be able to provide you that very shortly. And yeah, it will be whoever's completed the import customs clearance.
Okay, so another question: why many shipments of parcels from China get stuck in German customs, and they ask for an address in Germany when the person is not the importer of record, especially paid for door-to-door service?
So with this one, there's a few reasons why a shipment may get stuck in German customs. It would depend on how the goods are being sent. If they were being sent to a final consignee, there shouldn't really be any issues, as it would be a private address in Germany. If you were looking to send stock to your Amazon FBA or a warehouse in Germany, it could be that you do require an indirect representative based in the EU if you are a company which is established outside of the EU. So it could be that the transport provider isn't happy to offer you indirect representation and requires you to appoint somebody else. I would advise, again, we can look into the specific case. It could be something with the commercial invoice which is wrong, but please get in contact. AVASK do offer indirect representation in the EU, so we can look at your situation and see if we can advise further.
Okay, thank you very much. So what price should be displayed on a commercial invoice, the supply price or the retail price?
That's a good question, and again, something that's been popping up at the start of the year. So it would normally be the supply price, and that's what we would see declared usually. We are seeing some instances where the deductive method is used to calculate the values on the commercial invoice. We're especially seeing this in Germany, and it's again something it's worth having a conversation with your transport provider and customs broker about. To see what they are able to clear your goods for. But yeah, usually cost price. However, we are seeing the deductive method. Just to go into a bit of detail on the deductive method, that starts at the sales price. You can remove sales VAT, and you can also remove domestic fees such as Amazon FBA fees. So worth having a conversation with your transport company before and making sure that documentation is correct, as that's another reason why your goods could get stuck in customs.
All right, so let's check a few more questions. Another one. My product average selling price is £20 and all goods are shipped from China to customers in EU and UK. Does Amazon collect and pay VAT so I don't need to register for VAT?
So you'll still need to register for the IOSS scheme. So in this case, and this is post-July again, register for the IOSS. So that's an an import from outside the EU into the EU. So they'll all be taxable within that IOSS return. So still going to be declared taxable by Amazon. If all of these sales are by Amazon, Amazon will be collecting and remitting the VAT on the product, but still that you still have to have those relevant registrations per your business model. So this will completely depend on your business model. So it'd be great if you get in touch with us just to ensure we've got all of the information on where you're incorporated and those relevant requirements for us to fully advise. But in most cases, you would still need one VAT registration or the other. So get in contact with us for us to fully go through sort of what your business model is.
We have one more question about the bank account in UK. Is it possible to open remotely? I'm not sure if you're competent in this and if you provide such services.
So you can open a bank account in the UK technically. There aren't any sort of restrictions against that. However, the UK are quite strict on who they open bank accounts for. So yes, it is definitely an option. Yes, you can contact AVASK and we can give you some information on that in further detail. But I would warn that the UK are quite strict with who they open bank accounts for. So we do see a lot of bank accounts declined. There isn't too much of a need, to be honest, to have those bank accounts in the UK and EU. A lot of people are using great services such as Payoneer to do their VAT payments within the EU and the UK. So the requirement isn't there. If you really do want it, you can definitely apply, but there isn't that guarantee it will be accepted.
All right, I think we are done with this session. There are a few more questions which we will transfer to the last hour, where we will have still a quite long Q&A session. And if your question was not answered, please come back and we will meet 4 AVASK experts in the last hour. And now, thank you very much, Toby and Alex. And the next part will be about the rest of the world. So we covered US sales, like North America, we covered Europe, and now we will talk about the rest of the world. We will bring again 2 experts from AVASK. One more time, if you would like to connect with AVASK and the experts, check the link below in the description. You will find the link to their landing page where you can fill out the form and share your station, and they will be happy to help you answer your questions. And now let's take a very short break, and we will be back with the rest of the world. And this will follow with a long Q&A session. All right, this is part 3. Here we are talking about the rest of the world tax situation for Amazon sellers selling on Amazon marketplaces in outside US, outside Europe, marketplaces like Australia, UAE, United Arab Emirates, and so on. So I would like to introduce you to Tom.meek, whom you met already earlier. He's a partnerships partner, and also Piers Eveleigh, who is the business development officer at AVASK. Hello, guys. And so please introduce yourself, and we're ready to listen to what you have to share in your presentation.
My name's Tom. I manage the partnerships here. at AVASK Accounting. I've been assisting e-commerce sellers for the past 3 years now. Obviously been helping them expand to many different marketplaces, including the UAE, Australia, US, EU, and many more. In terms of obviously other services, we've been through the US and the tax services there, but we also obviously offer services in the EU and UK, plus our custom services. Just tuned into Alex Robson and Toby, which was great to listen on their part. So Piers, can we hear you now?
Can you hear me, guys?
We can indeed. Welcome.
Yeah, I think I just had a bit of a problem with my mic, but yeah, just wanted to say hi to everyone. My name's Piers. I work as an International Business Development Officer here at AVASK. So first of all, just wanted to say thanks very much for having us on again today, guys. It's a pleasure to be here in front of so many attendees. I think that really shows the significance of the topics that we're discussing. In terms of my primary role at AVASK, it's really to help entrepreneurs and businesses with their expansion plans on a global scale. So as part of this presentation, Tom and I will be focused on Australia and the UAE, which are two really exciting marketplaces. So really looking forward to getting stuck in.
Absolutely, yeah. So obviously we've got another presentation that we are going to be sharing. So if you haven't already heard enough about taxes, we are going to give you some more. So stay tuned. This one will probably be a slightly shorter presentation. But nonetheless, everything you need to know about Australia and the UAE is coming right up.
Awesome. Thanks, Tom. And I think as Augustus preluded to before we actually started, in terms of rest of the world marketplaces, a lot of clients that I speak to refer to Australia as their next favourite rest of the world marketplace. And it's not just due to the sandy beaches and year-round sun. There's also some really good potential there for businesses to expand. So as shown on the first slide, what we've got is just a general overview to the marketplace. So as you can see here, things like the population in Australia, you've got 26 million people. You've got quite a young category of people. So urban, professional, expendable income, and in most cases, a lot of these younger generation will want to be spending money through online marketplaces such as Amazon. So that gives a really good platform for businesses who are selling through these marketplaces to really profit from the people that are out there and doing the buying. So in terms of sort of what I see when it comes to the type of marketplace Australia is, yes, it's a smaller marketplace than the likes of the EU and also the US, which are obviously the more popular marketplaces. However, there is still a good population. You've also got a high GDP per capita. And as you can see, you've also got a high internet penetration, which continues to grow year on year. So lots of potential, and also really good potential for businesses to get themselves established in a still growing market, which with the funding that Amazon are putting into, is going to continue growing year on year. So I see a lot of good potential in Australia. So yeah, just a few stats as a general overview to start with.
Just to add in, Piers, I mean, looking at the stats, extremely interesting there on the overview. Fairly small population, but very high internet penetration. So definitely it goes without saying that the opportunity's there. And we've done a lot of webinars recently on the globalexpanders.com, which is an AVASK resource for sort of lots of different tutorials, videos, webinars on topics outside of taxes. And we talk a lot about diversification and the benefits to sellers. And I would say that obviously when the right time to expand, well, who knows, when you've got the right resources and when you've got the right backing to be able to do that financially. But I think one of the easiest ways to diversify and grow is, of course, marketplace diversification. So looking at additional markets, countries like Australia with a massive opportunity for growth. And I think we see the most successful brands develop over the years that actually approach the markets the quickest. So with a very quickly growing marketplace and Amazon pumping a lot of money into new fulfillment centers there, I would say it's a no-brainer to start building that into your business plan as to how you plan on attacking Australia, if Australia could be a market that would benefit your product line or what you sell.
Yeah, absolutely, Tom. And I think just on that point, I don't know whether everyone will be looking at things like e-commerce news, but last year we saw Amazon open their 4th fulfillment center in Australia. This year they're adding another one. So I think just from that, it's really evident to see that they envision this is going to be a huge market in the future. And as I said before, a really good opportunity for businesses who haven't already expanded into Australia to gain a foothold and to gain market share in what is going to be a very fast growing market. And I see you moved on to the other slide. So I think this slide, we've just put it in there to show some of the more popular lines of product that are bought via online marketplaces in Australia. And I think the main thing that stood out for me on this slide was that I saw a direct correlation between products that tend to sell really well in established marketplaces such as Europe and the US, and actually products that tend to sell really well in Australia as well. So previously, when I've helped sellers expand into Australia, what I've seen is that a lot of the businesses that have done the expansion and got GST registered have actually replicated the success that they've had in marketplaces in Europe and the US without having to add additional SKUs to their product line. And the reason for that is because you've got things like technology, you've got things like fashion, retail, which are all very popular brands, which a lot of sellers will already have as part of their product line. And yeah, it's also really popular in the Australia marketplace. So in terms of actually having to do the research and potentially finding new products, there's not so much of a focus on that with Australia.
Yeah, absolutely, Piers. Yeah, I think it's really interesting to see the different categories that are most popular. And as you say, it's replicated across the fair majority of marketplaces. And of course, we're going to touch on the UAE as well, which says a similar number of these different categories that are shown. And I think what's a really important point is that not everyone watching today is going to be starting in Australia unless you're maybe based there. So don't feel that you need to be thinking that from the outset. I think there's always a right time to expand for businesses. As I say, that comes down to a number of different things. But I think with FBA especially, it's not just the marketplace. There is the facility to hold stock, and I know we're going to be coming on to this in a minute. But with a very quickly growing market, there is a huge amount of opportunity, and diversification is also about spreading risk. And I think if you're able to build your brand in multiple countries, then it's only going to be successful for you longer term, perhaps when you're building the business, or if you're potentially looking for an exit in, this year, next year, whenever it might be.
Absolutely. No, completely agree. And if we go on to the next slide, I know we've already spoken about a few of the benefits, Tom. So, things like relatively new marketplace with a lower amount of competition. And also you've got that high GDP, meaning that people are willing to pay a premium price for the products that they're purchasing. There's also some additional benefits which people might not be as aware of. And actually what you find in Australia when you're selling through FBA is actually you've got lower seller fees than more of the traditional marketplaces, and also lower FBA fees. So when you are actually fulfilling orders, you'll find that the fees that are being charged are going to be much less than you're accustomed to in places like Europe and the US, which is a real benefit. And the last thing I want to point out is there's also massive seasonal business opportunity in Australia. So I don't know if we've got any sellers online tonight or this afternoon that sell flip-flops perhaps or caps or anything like that. But if so, you're probably in a really good position to take those caps or flip-flops over to Australia and get them online.
Yeah, absolutely. Couldn't agree more, Piers, on that one. I think a classic example is that we had a seller that had been with us for many years. It had only been selling in the UK and EU that was selling very much seasonal items. Okay, so beachwear and all of those sorts of things. And he hadn't really thought about that. And he had a huge amount of stock left over from the season that had been. And he actually then looked at Australia as a marketplace and couldn't believe the success that he had and the uptake. And of course, he had the stock to be able to facilitate it as well. Now, I know we haven't touched on the taxes, but it was a really easy entrance for him in the market. And now he's, ranking number one, and he's, selling a huge volume of stock in Australia. And had he not have done that move, then, how much less valuable would his business be today? So it's a really important point, the seasonality.
Absolutely. And I think just going on to the next slide as well, it ties in quite nicely. If you do have a seasonal good or not, it's quite nice to know that if you are thinking of registering for GST in Australia, there's a threshold in place for all businesses that you can actually utilize before making the decision to become GST registered. So I think it's really important just to outline this from the outset before we do a deeper dive into GST and what the rates are, etc. You're probably thinking, who needs to register for GST? What is this threshold? So all companies that are expecting their annual turnover to be in excess of 75,000 Australian dollars or more must register for GST. And that threshold is calculated on a 12-month rolling period. So it's not on a calendar year, it's on a rolling period. Companies with an annual turnover of less than 75,000 Australian dollars can voluntarily register for GST, but don't have to. So if you are looking to test the market, so to speak, and want to get a feel for the brand visibility, the product visibility, and also the consumer type, then you can utilize that $75,000 threshold. I don't know whether you wanted to go into your experience, Tom, on what that threshold looks like and how clients usually utilize that.
Yeah, I think it's an interesting one because, we talk about a lot of different marketplaces, and a lot of marketplaces require you to register immediately. So to have this flexibility and to be able to test the market is a real bonus, I would say, with Australia. Just before I sort of go on to sort of my side and what I see sellers doing, maybe we could just break down this slide a little more, Piers. So GST is what? If you care to maybe go into GST and how it's compared to VAT and what the rate is?
Yeah, absolutely. So GST is what's called goods and services tax. So it's basically, as people see it in Europe, VAT, in the US, it's sales tax. In Australia, it's called GST. And if we've got sellers who are watching this tonight and familiar with the Canadian marketplace, then they'll have experienced GST before. It works in exactly the same manner as VAT works in Europe. So if you've got people who are experienced in Europe, then GST is exactly the same. It works in the same way and it's collected in the same manner. So at a government level, it's declared to and remitted to, and it's remitted at a rate of 10% in Australia.
Absolutely. So 10%, half of the UK, which is always nice, but GST instead of VAT. So if you hadn't already had enough of sales tax and VAT, now you've got GST to bring into the mix as well, which is, an added bonus, I suppose, for this evening or today, whatever time it is for you. And Piers, maybe we could just pick apart these thresholds again. So if I'm a UK business and I'm looking to start selling in Australia and I'm sending my first shipment, let's say, from China into Australia, what does that mean from a threshold point of view? And do I need to register straight away?
So as a UK business, say your supplier, which we see quite frequently with online businesses, usually the supplier, or in a lot of cases, will be in the Far East. And the reason for that is because the labour costs are a lot less and the products are a lot less. So it makes sense to purchase from somewhere where you can really minimise your liabilities in terms of outgoings. But if you sent your stock into FBA in Australia, then you would not need to register for GST from the outset. You can actually make $75,000 worth of sales to Australian consumers through the online marketplace before you're obliged to actually register for GST. Now, some might want to do that from the outset, and the reason being is we'll go on to that a bit later, but ultimately whether you do not register for GST will impact whether you can actually reclaim import GST, which is very similar to how import VAT works in Europe. But as I said, we do have a couple of slides later on, which we'll come on to.
Okay, awesome. Thanks, Piers. So how to register for GST? What are the two steps?
Awesome. So yeah, the registration process in Australia is a fairly straightforward one, actually. First things first, you'll need what's called an ABN number. This is called an Australian business number. and essentially is used so that the Australian tax authorities can identify your business as an operator in Australia. So during the registration process, AVASK will obtain your ABN number for you. That ABN number normally takes about 4 weeks to become registered. And once that is registered, AVASK will use the ABN number to then become GST registered. Okay, so your ABN number is the number that becomes GST registered. It's not two separate registrations.
So a little bit like the EORI number maybe in the UK. So when you have your VAT number, it's like your EORI number, but plus 3 zeros. So a fairly similar model if anyone can relate it to the UK.
Yeah, precisely. And actually, in terms of timeframes, it works in a similar manner. Once you're VAT registered in the UK, if you're looking to get an EORI number, for example, in France, it can be done within 24 hours. In Australia, once your ABN number is registered, when you get that number GST registered, that's only going to take another few days in most cases. So in total, for your ABN and GST registration, you're looking at between 4 and 5 weeks. Now, in terms of what we charge for that, the cost for registration is actually free of charge for businesses that are looking to expand. So it's kind of an incentive to try and diversify your business in multiple marketplaces. And then once you are GST registered, you will require to remit on a quarterly basis the GST filings. So the GST filings are charged at $1,850 per annum. And as I said, in Australia, you need to submit those filings on a quarterly basis.
Okay. And they're called BAS statements, aren't they?
They are, yes. Slightly obscure one, that, but yeah, BAS statements.
All these new terms go on.
Lots of new terms, probably far too much to take on board on one evening, but you can rewatch these sessions if you are overwhelmed. So, refer back to the YouTube page and you'll be able to refresh your brain once you've had a little break. But yeah, thanks for moving on to the next slide, Tom. This slide is referring to, as I mentioned before, import GST in Australia, how this is reclaimed and what it means for registered and non-registered businesses. So when you're sending your goods to Australia, you're going to have to pay import GST. And it's the same as paying import VAT in Europe. So similarly, it's calculated on the cost value of the goods, plus the insurances, plus the shipping charges, and plus the duties. And you need to pay this when your goods reach the border. So that's before your goods can be cleared. You'll need to pay your GST and also your duties. However, if you are GST registered, then you can reclaim your import GST in your next quarterly filing. So if you go down the route of registering for GST voluntarily, the main benefit is that import GST is fully reclaimable against your GST liability. So what you'd need to do is declare the 10% on all of your sales to the tax authorities, and then GST would be subtracted from that sales liability, and then you'll just have to pay the difference when it comes to the quarterly filings. Now that might sound quite complicated, which is why you have an expert such as your VAT consultant or GST consultant at AVASK who's doing that for you. Just on that same topic, when it comes to the advantages and disadvantages of registering for GST, I'd say that the main negative bit of feedback that I receive from sellers that don't register for GST from the outset is that they're unable to reclaim import GST, meaning you've got an additional 10% that you'll either need to absorb into your profit margins or increase your prices by. Okay, so the majority of clients that I do assist when they're importing into Australia and getting registered is they want to register for GST from the outset. And the reason for that is just to get it out of the way immediately. It can save time later down the line. I'd say that probably 75% of clients will do it immediately just to save the import GST side of things as well. On the contrary, yes, you can wait to see how you're performing. So as we said, you do have that threshold. So there's a bit of flexibility when it comes to the registration process. If you want to see how your sales are performing, then you can utilize the $75,000 threshold that's in place.
Just to add in there, Piers, as well, I suppose, when you're making this decision, it depends on, those things that you've mentioned, but also your margins and also the volumes that you plan on selling. So typically that would obviously be, sellers want to dip their toe in the water and review the Australian market before they register. So it is a great way of being able to test that without having to pile in from a tax compliance point of view. And especially if you've got very large margins and the import value, the 10% that's collected, isn't of massive significance to your profit margin. Well, it's worth testing out at the start. But I'd say certainly in my experience, where I see sellers expanding, they're tending to register very soon after they've had their first few shipments into FBA. Would you agree, Piers?
Yeah, definitely. I'd say with what I normally see with sellers is that obviously we'd always advise for sellers to do the research, do the preparation, and do the forecasting on the products that you're selling before you actually enter a marketplace. So I'm sure people are familiar with service providers such as Helium 10 or Jungle Scout. Those guys can be really handy when it comes to analysing the potential revenue from the products that you're going to be selling in a marketplace. Normally clients that I see that do actually do the expansion and take that step, they might not be 100% confident that their products are going to perform to the level that they're hoping. But as Tom mentioned, normally after a few weeks or a month's time, the turnover has been really good. And because of that, they're already going to be quite near that $75,000 threshold. So it's not a problem. We can register you at a later date. But in most cases, what I see is that threshold is reached in the first year, and therefore GST registration is ultimately needed.
Yeah, absolutely. And MFN from outside of Australia, so merchant fulfilled orders from outside of Australia, Piers, how does that work?
So when you're sending goods via MFN, so from outside of Australia, direct to consumer, at a value of above $1,000, then GST will be collected as your import GST. So you have to pay import GST at the Australian border before your goods can be cleared. So just as we said previously, because of this, you'll only be able to reclaim that import GST if you're registered. So MFN and FBA work in the same manner in that respect. If you want to reclaim the import GST, you will need to register even if you're MFN rather than FBA. When you are importing under MFN, you will also need to fill out things like your commercial invoice. There'll be an import declaration in Australia, and you also have to pay duties and shipping charges. Now, Toby's already done a great presentation on customs and trade, and we've got a lot of experience from people like himself and other members of the customs and trade team that can assist. But what I see in Australia is that in 99% of cases, the transport agent that is handling the movement of inventory will actually take full responsibility for things like your import declaration and the payment of duties and taxes. So I'd always advise speaking with your transport agent, making sure that they have everything in place to enable to basically provide a door-to-door solution. The last point I'd make on that is that duties in Australia are typically charged at around 5% for most of the commodity codes. So it makes it quite simple. In Europe, there is thousands of different commodity codes for different types of products with different rates of duty. In Australia, it's all quite consistent around the 5% region, which is considerably less than quite a lot of products in Europe, for example. Awesome. And yes, on the low value imported goods. So again, this is referring to the import GST. So import on the low value goods was introduced in July 2018. So before then, any goods that were priced under $1,000 were not subject to paying import GST. That has now changed. So on the 1st of July, new regulations were introduced. What it looks like now is that anything that is imported that's $1,000 or below, Amazon is going to collect the GST for you. Anything at $1,000 and above, Amazon is not going to collect the import GST, and you're going to have to remit that yourself.
Yeah, absolutely. Really good to see that. I think it's really important to understand the thresholds right from the outset. And we're seeing a lot of changes with how tax is collected across other marketplaces, Piers. What's going on with Australia and Amazon collecting GST?
Yeah, it's working in a similar manner. So from the 1st of January in the UK, you had new introductions in terms of the way that VAT is collected, and you've got the £135 threshold, and also Amazon becoming the deemed supplier. So if you're fulfilling through an online marketplace in the UK now from outside, Amazon is going to be collecting and remitting the VAT to HMRC on your behalf. And you will still have the filing obligation, so you still need to remit your VAT returns on a quarterly basis in the UK. Essentially, it's working in the same way in Australia, but there's a different threshold in place of $1,000. So it's a very similar concept to places like the UK with the deemed supplier, and also in Australia in the various states, the 27 states where Amazon's acting as the marketplace facilitator. So a lot of people will be very accustomed to that sort of setup when it comes to the collection of GST and remitting that to the Australian tax authorities. Awesome. So last slide for Australia. I think it's just a general sort of overview to the tax and regulations. So I think just a few final points from me in terms of Australia GST and its similarities to European VAT. So GST, as we've already said, is 10% sales tax, and it's inclusive in the retail price. So the same as in Europe rather than in the US, where it's added at the checkout. It was introduced in July 2000. And I think just to finish off with an example, just to bring everything to life, if you're planning on selling a product or a service at 10 Australian dollars, you need to ensure that you are adding an additional $1 for GST, and that you are charging the customer 11 Australian dollars in total, and it's $11 that you're listing your goods for on Amazon's or any other online marketplaces electronic interface, because it's not going to be added for you. So it's added at each stage of the production, and you need to make sure it's added into your retail value or transactional value that you're selling for.
Awesome. That's really interesting, Piers. Thanks for going into detail on that. I think what an opportunity Australia presents. I think that, with the threshold there's no excuse, if you're in the right position to be able to look at that opportunity and as Amazon are investing a huge amount of money in new fulfillment centers, it is all about driving growth. And if they're driving growth, then they're going to help you to obviously drive growth yourself. So the earlier you get in, the better. But of course, make sure that you have the resources, the time, the cash flow to be able to do so properly. But that's been great. So much shorter this part of the presentation, the UAE. You'll be pleased to know we're back onto VAT. I don't think anyone's pleased to be on VAT, but maybe you're pleased to be on VAT as opposed to GST and sales tax. So probably about 10 minutes max this part of the presentation. So stay with me. If you've ever been interested in the UAE marketplace, then it's really, really straightforward. So again, just to kick off with some stats, a slightly smaller 10 million as a population. We've got the e-commerce penetration at just under 70%. So again, very high. As a lot of people know, Dubai's actually been listed as one of the with the highest monthly salary and disposable income. So spending habits are equating to about $1,700 per online shopper, and that's expected to grow around 25 to 30% each year. So huge opportunity here. Very high internet penetration at 98%. And the revenue across the UAE in 2020 was around 20 billion. Okay, so massive opportunity again. I think the most important stat there is sort of the spending habits. That's just under $1,700 per online shopper, with a huge growth trajectory as well. So really interesting there.
Yeah, I think just to add on that, Tom, as well, I work quite closely with one of the VAT consultants here at AVASK, who actually comes from the UAE. And he was saying that Amazon launching in that marketplace has been really exciting for buyers in the region. It's a much higher caliber platform to some of the others that have been introduced in the past. So what he was saying is that previously, if you were buying an electronic good, for example, like a lamp or something, you could buy that and you wouldn't actually know what color the product was going to turn up in. So you could buy a red lamp and something green would turn up. So from experience that we've had and feedback that we've got, actually, it's been a really good thing that Amazon's moved into this marketplace, as it's given sellers a lot more confidence in terms of providing them with a solid platform to actually sell goods on.
That's very interesting. I would. The last thing I'd want is a red lamp turning up instead of a green lamp. I couldn't deal with that.
No, absolutely.
Yeah, in terms of the tax aspect in the UAE, as I said, we're moving back to VAT. So the standard VAT rate is 5%. Unfortunately, it's not like Australia where you have that threshold. If you're a non-UAE based company, then you will have to register for VAT immediately. As soon as you start selling, you need to be registered for VAT in the UAE. If you're a UAE based company, if you're based there, then with taxable sales and imports exceeding 375,000 AED per annum, then you also need to register. Okay, but most people joining us, I'm sure, are probably non-UAE based. I'm presuming it may not be. In which case, the VAT registration is mandatory and required immediately. So VAT registration, how long does it actually take, and what sort of documents do I need to register there? So some of the basic documentation in line with all other registration requirements, I would say, for most countries, is things like your passport, certificate of incorporation, trading licenses, articles of association, all those typical business documents proving you're a formed entity or you're a sole trader, whatever it might be. You do need a letter of intent signed on a company letterhead with a company stamp, but AVASK administrators will advise you through that. You need the bank details, financial statements, and of course I mentioned passports, sort of proof of address and things. So real general documentation, all fairly accessible, I'm sure. And the registration actually takes around 30 days. So it's much quicker than the likes of Germany, for example, in the EU, where you might be waiting anywhere from sort of 2, 3, 4 months upwards for the VAT to go live. So nice 30-day period here.
Mm-hmm. I think just touching on that, Tom, with the UAE tax authorities, they're extremely vigilant when it comes to making sure that applications are in and submitted and also received before the seller actually starts to fulfill sales through online marketplaces. I think there's a fine that's payable of around $20,000 in the currency over there. So I think that's similar to about £4,500 here in the UK if you're not registered immediately. So it's just something to be aware of. If you are looking to make that step, then we'd always recommend to have the compliance in place immediately.
Definitely. Although I would also add, if you've already done it and you haven't been compliant, don't let that scare you off from speaking to us, because we'll try and find the best solution for you in all cases. So filing periods. So if you have a turnover below 150 million dirhams, then you're going to be filing quarterly. So most of our clients are going to be filing on a quarterly basis. And of course, if it's over 150 million, then you're going to be filing monthly. I would say 95% of sellers that we speak to within the Amazon world tend to be filing quarterly, easing into monthly, and fairly quickly after they've started selling. Filing and payment of the VAT returns must be made by the 28th of the next month after the tax period has ended. So an example of that, if the tax period is from 1st of January 2021 to 31st of March 2021, the VAT will need to be filed, end of April, on the 28th of April 2021. So you'd have a month or 28 days after that period end. So nice and straightforward. So yeah, much shorter on the UAE side. I think it goes without saying both marketplaces have a huge amount of opportunity, and I think are very straightforward to start selling. I think obviously local languages being sort of English, I think there's not a huge need, especially in Australia, for translation. And I would say that again, in terms of investment and where each marketplace is actually ranked in terms of the product line, I'd say that Amazon is ranked one of the highest in both marketplaces. So definitely very easy to get started, especially using the FBA model. So Piers, anything from your side?
I think just in both cases, Tom, it's a really fantastic opportunity for sellers to launch in these kind of marketplaces because relatively still untapped, still unsaturated, and that presents the opportunity for sellers to establish themselves in a growing marketplace. I think, categories wise, as we've already mentioned, a lot of the products that do really well in those marketplaces, people will already be selling. So I'd urge people, if they are interested, to reach out to us, and we'll be more than happy to talk you through how we can work with them. Firstly, to get them registered, and then to assist them on an ongoing basis.
Definitely. And just to add there, I think wherever the marketplaces are investing in, there is, it's not guaranteed, but it's fairly obvious that there is going to be growth in these areas. And I think what puts people off maybe some of the other markets is the saturation, as you say, Piers, but these markets are not yet saturated, and a lot of cash is being driven into the fulfillment, making the whole e-commerce cycle in these countries, these territories, so much easier than it was before. And we know that e-commerce has grown a huge amount and will continue to do so, especially due to obviously the pandemic. But I think that the consumer habits have shifted, and I think that because of that, the growth will continue. And it will stay steady. So I think it's really important to identify the opportunity as quickly as possible. And as I say from the start, don't always rely on yourself to do everything. Lean on the providers like ourselves, the shipping companies, the payment companies, to make your lives easier. Focus on growing your business, really reviewing your margins, your suppliers, your product ranges, your PPC, all of those different things. And get into more markets so that you diversify, you spread risk, and most importantly, bring more value to your business. So I think that's it from our side on the presentation, and opening up to the Q&A, Augustus.
Perfect. So we have quite a few questions related to your last session, and we will go through them for about 15 minutes. Then we will start the open Q&A session for all the questions which were not answered in the previous hours. So let's go with the first question. If you are a US C Corp, what do you need to register and sell and pay taxes in Australia?
Yeah, happy to take that, Augustus. Thank you. If you're a USA C Corp, in terms of your requirement for registration, this goes back to the threshold that they have in place in Australia. So that business, the C Corp, could launch on Amazon Australia and actually start fulfilling orders to Australian consumers under that $75,000 threshold before they have to register for GST. So they have that threshold, $75,000. Under that, they don't have to register. The downside is that they won't be able to reclaim the import GST. But once they've reached that $75,000 threshold, they would have to register.
Great. Next question is, what are the requirements to obtain ABN for a non-Australian resident? Piers got disconnected.
So what are the requirements to obtain Australian business number for a non-Australian resident? So
Piers is back. So I don't know who is better to answer this.
Yeah, I mean, I've went through the documents, Piers. So what are the main requirements to obtain an ABN?
Main requirements to obtain an ABN, it's going to be firstly an application form. Secondly, it's going to be things like your supporting documents. So what we'll need is a colour copy of your passport, but also need proof of identity. So that can be things like utility bills, whether it's water, gas, electric. And then what you'll also need is your company document. So things like your share capital information, certificate of incorporation, articles of association, that sort of thing. What we'll do with clients is if they are looking to obtain that number, we can send through a comprehensive list or checklist just to say this is what we need to in order to move forward with the registration.
Okay, very good. So next question is, how often do sellers have to report GST?
So in terms of the reporting, it's done on a quarterly basis in Australia.
Okay, very good. So it's a short question and short answer for that one. So
Yes.
next one is based on all the information and your experience, what would be the less complicated market to enter? Is it Australia? Is it UK, EU?
Yeah, I'm happy to take this on, and Piers, you can chip in after. But I think it really depends on so many different things. I'd say that, of course, what's most important to bear in mind is your category, your products. You know, where are they going to sell best is the most important thing. But in terms of how complicated each market is, you know, we went through them. I mean, the EU and the UK have become much more complicated due to Brexit, but I would say the opportunities increased because there's less competition than there was. The barriers to entry to the UK and EU, I would say the UK is probably easier to enter than the EU. But then you've got like the likes of Australia. Australia has obviously got that threshold in place. So, you know, you don't need to register immediately, which is, you know, obviously a huge bonus. So I would say it really depends. And I think you need to really work out more what's the strategic point of you expanding there and what's going to bring you the most value, because all markets you know, yes, there's administrative burden on you to register, but none of them are really overly complicated. It's just a case of putting the hard work in and the effort to be able to make the launch successful. What do you think, Piers?
I'll say that, yeah, a few really good points there, Tom. I always think that when you've got all these different marketplaces, it's quite interesting because with each different marketplace, it presents a different opportunity. It's slightly different characteristics, slightly different traits, different consumers and different consumer trends as well. So by having a spread across multiple marketplaces, what you're doing is really diversifying your income streams, because you're getting your eyes in front of so many more bodies, so many more eyes. And then you've got that direct correlation between the number of eyes and bodies that you're getting your products in front of and the amount of turnover that your product can make. So expansion is always, you know, a really exciting topic, because usually it means that the company is performing really well. I think if clients or sellers out there are interested in making that step, as Tom mentioned before, what we'd always say is, you know, use the service providers and the experts that are out there to really lean on and get the information, get the advice and guidance that you need in order to then put the actionable steps in place and get registered in the country that you're interested in expanding to.
Yeah, and just to jump in there, I'd say the UK and EU, in my opinion, and from what I see generally, is more popular to start off with than the UAE and Australia. I'd say typically, and this is sort of on a real general note, I would say that most sellers are starting, depending on where they're from, in the US or EU and UK before they then look at other marketplaces outside that. So that's just my opinion, and that's what I see most sellers doing.
Yeah, I'd agree with that as well.
All right, next question. Is Amazon Australia as a marketplace collecting any taxes on the behalf of the seller when the sale is made off, or the seller is responsible for everything?
So in terms of Amazon Australia as a marketplace, when it comes to the collection of taxes, it is the seller's responsibility to collect and remit the taxes to the Australian government. When it comes to importing into Australia, you'd also be responsible for collecting and remitting. But the difference between GST on the sale and GST on import is that your import GST will be reclaimable on your quarterly filing, whereas the sales GST that you're remitting on the quarterly basis will not be reclaimable. But it's the seller's requirement to remit those taxes.
All right, next question. Do sellers need to have some kind of registration or get any documents in order to be able to send products to Amazon Australia warehouses and start selling?
I mean, it depends on the products. In most cases, no, but in some cases you might have hazardous or dangerous, or in some cases food might be a good example where you might need a particular license or a certificate. In those cases, it's going to be quite specific to the client. So what I would say is that you can reach out to us directly to see whether our customs and international trade team can help. Alternatively, the next best bet, in my opinion, would be to speak with your transport agent that's actually assisting with your shipment and doing the import declaration based on the commercial invoice, because in most cases, if they've had experience or prior experience with importing into Australia, then they will be able to advise based on the codes that you're providing them. And they might be able to say, well, with this product, you're actually going to need a license or a certain certification in order to actually clear customs.
Okay, very good. So we have some more questions. So is it necessary to obtain an Australian business number as a foreign entity when starting selling on Amazon Australia?
Yes. So you can't have the GST registration without the ABN number.
Mm-hmm.
And the ABN number is what the Australian authorities require to identify the business as a trading business in Australia. So without an ABN, you can't be GST registered. And ultimately, that would mean that you're going to be non-compliant once you've breached the threshold.
Mm-hmm. Okay, very good.
Going back to the last slide as well, I think in terms of requirements, most sellers would tend to get an ABN number early on as they start selling in Australia, but that obviously doesn't necessarily mean that they then need to be GST registered off the back of that. Is that right, Piers?
Yeah, correct. So they could just have an ABN number and wait, as I said, utilize that $75,000 threshold. They might want to wait a few more months just to see how performance is, and then do the GST registration subsequently.
Okay, very clear. So if you would compare the Australian tax system to the US one, for example, then which one is more complex and difficult?
I think that's down to anyone's opinion, really. I would say that in my opinion, the US sales tax system is more complicated on the basis that there is more to it. There's more states. It's like dealing with 50 or countries, it's really similar. So I know we broke it down into very simplistic terms today, and the marketplace is responsible for collecting in the majority. But I would say just on the basis of the volume, I'd say that the US is more complicated.
I'd say in the US, it's quite a crazy stat actually, but in the UK, for example, which Australia is very similar to, you've got one taxing jurisdiction, which makes it very simple for everyone to understand. In the US, you've got over 10,000 jurisdictions throughout the country. So that just gives everyone an indication for the amount of complexity that's associated with that. So in my opinion, the US, without the expertise, would be a really difficult country to navigate in terms of taxes.
All right. Thank you very much, Piers and Tom. We will have a 1-minute break and we will be back with open Q&A. So if you have any questions which are not answered yet during the last 3 hours, make sure you put them on the live stream chat box. And we still have some questions collected which we didn't have time to answer before. So see you in a minute.
Thanks,
Thank
guys.
you. Bye.
Bye. All right. Hello, everyone. So we have now the last part of this big workshop about Amazon taxes, and we have a lot of AVASK experts here on the line. We will have a lot of questions related to US taxes, EU taxes, and global taxes. And let's first check for questions related to AVASK services, because we saw some people were interested in what you guys do. So let's see. The first one, do you provide indirect representation for importing to the EU? Who could take this question?
Yeah, I can take this question, Augustus. So yes, we do provide this service. We can consult and check that you do require it, offer you indirect representation, and also point you towards some transport partners we work with in order to get cartons and pallets into the EU. So yeah, please reach out to us or myself, and we can assist you with this.
Perfect. Next question is, if it was not asked before, how AVASK charges for its services? Complex question.
I'm happy to take that, but it really depends on the service that the client is interested in utilizing. So, for example, let's just take the VAT, the GST, and the sales tax, for example, as those are the topics that we've been discussing today. What we'll normally do is a one-off payment for the registrations. So let's say, for example, we had a client who was looking to expand into 3 different European marketplaces. We charge £250 per European country. So it'd be a one-off charge of £750 for registration. And then our compliance fees for the ongoing filing and compliance is charged on an annual basis. And that will really depend on the number of countries that the client is looking to use our services for. So we've got bundle fee schedules. The cost of compliance and filing goes down depending on the number of countries that you use us for. So if people are interested to gain an understanding of what those fees look like, then do get in touch afterwards, and yeah, we'd be more than willing to share our fee schedules.
Great. 2 more questions about AVASK. The next one is, do you work only with QuickBooks and not with Xero? So probably someone saw that you can integrate with QuickBooks. So anyone?
Yeah, I'll take that question. Yes, we use both Xero and QuickBooks. We have vast experience using both softwares. They both work just as well. So whatever software anyone's using, we can integrate with that.
We are a UK existing AVASK client. Who do you I contact to set up the US side of things, as just discussed by Tom and Tim?
You would actually want to you can reach out directly to me. I believe my email address was up there before. Just reach out to me and we will help you get everything set up here in the US.
And also we will write those email addresses in the description below. All right, Lisette, let's take another question.
Yeah, with the US registered business selling in the US, if you want to expand into other marketplaces, can this be handled by AVASK US, or would you need to contact AVASK UK separately for that?
So what you'd want to do, I was going to say you'd want to, you can contact us and I would hand you off to AVASK UK just because they are more knowledgeable on that topic.
And another one, is there an US mechanism to get the refund on the important taxes duties in US against sales taxes, as it is the case for VAT on import against VAT collected from sale?
I don't believe there's a way to get import taxes refunded on your sales tax return. The sales tax return only handles sales taxes. It doesn't handle any kind of import fees that are paid when importing into the US.
All right, let's take a few non-US questions to mix up. Is Australian GST also triggered in 2 ways as VAT in Europe, by the location of storing the products and by the sales volume?
Australian GST is triggered once you've triggered that threshold of $75,000. So I know there is sort of these regions in Australia like New South Wales, Queensland. There's no cross-state threshold, similarly as there is in the US and the EU. It's simply once you've breached the $75,000 threshold, all of the sales that you're making, you must pay GST on, and that's at 10%.
I think this is a great question for Alex. What are VAT obligations relating to return orders on Amazon Marketplace? So when the customer returns the order.
Yeah, we get this question quite a lot. I know a lot of people are worried if that gets taken into consideration. The reports we use are all it's called the Amazon VAT transaction report. That details all your sales and all of your returns, your refunds, everything. So if you've had a sale and it's been refunded, that will show up on the report for the month, or if the refund or return was the month after, then it will show up in the next return and be taken into account then. So all returns and refunds are all on the same report as the sales, and they're always taken into consideration.
Does Australian GST apply to shipping and gift wrap services?
So GST is applied to, I presume this is the cost of shipping. So when it comes to working out the amount of GST or import GST that you'll pay, you'll calculate it on the shipping costs, the insurances, and also the duties. In terms of gift wrapping services, I'm not too sure on that one, to be completely honest.
I can shoot in here. That's fine. So VAT or GST in this case is due on the whole retail value. So if your customer is paying extra for the shipping and gift wrap, or if that's included, then it is 10%, in Australia's case, 10% of the whole sale. So yes, that would include the shipping and the gift wrap.
All right, another question about Europe. Is it faster to get VAT in UK or in Germany? I don't know why person is asking. Maybe maybe it's US seller who wants to just quickly sell in Europe.
No, it's a good question. The UK is quicker. The UK is definitely quicker than Germany. Germany is one of the strictest tax authorities. So Germany have improved a lot over recent months. It used to maybe take 5 to 6 months to get a German VAT number, but recently you can get them quicker. But the normal one to beat it to it, I would say, is the UK.
Great.
Just quickly on that, with the UK and Germany, when the UK was part of the European Union, so prior to Brexit on the 1st of January, both the UK and Germany made up 2/3 of Europe's total e-commerce turnover. So I don't know about your experience, Alex, but I'd always suggest that if clients are interested in expanding into one or the other, it might be useful to look at both at the same time. Whilst the UK might be live slightly quicker, but having both running at the same time is really going to maximise the amount of turnover that people can make.
100%. It will allow you to sell in the UK and Europe, having the mainland European VAT number as Germany. So for anyone that's expanding, I'd recommend to do both options. It's not like, should I do UK or Germany, because the UK isn't applicable to Europe anymore. So I'd definitely say do UK. UK is a very, very big market, and do Germany for facilitation of the EU orders. And obviously Germany is the sort of predominant EU country in terms of e-commerce. So I would recommend to still do both. I agree with Piers.
Okay, so somebody asked, do you provide tax representation in Canada?
Yeah, we have people in Canada that we can refer, anyone who needs any kind of tax assistance in Canada.
I think just exciting news on that. Recently, we've just learned that we will be starting a Canadian GST service soon. So it's something to look out for over the next few months. We're very much in the developmental phase at the moment. But as soon as that's live, I believe it's going to be managed by our US office, not confirmed yet, but yeah, definitely in the pipeline. So yeah, if you are registered, then do keep or looking to register, then keep in touch with us.
When selling on United Arab Emirates marketplace, should I consider VAT when pricing my products?
Yes. Alex, do you want to take the answer?
Yes. So it should always be taken into consideration when pricing your products. Always think of your profit margins, same as the EU. Always marking up your products will include the VAT element. Always take it into account because it's included in the price. So definitely.
One more question about Europe. What are the main benefits of the implementation of one-stop shop for Amazon sellers in Europe?
So the benefits depend on your incorporations. It's on two sides, whether you're an EU or non-EU company. From a non-EU company side, you've obviously got the Amazon Collect and Remit, and you see less benefits from the one-stop shop. So if you're Amazon only, you'll see less benefits from the one-stop shop because you won't necessarily need to use it because Amazon are collecting or remitting on those sales. So you're not making those distance sales. For a non-EU company who's also making other sales, you'll see that benefit from that one-stop shop, like those website sales I mentioned earlier. For an EU entity, you're going to see a large implementation and improvement with using the one-stop shop. So as I mentioned, previously, you have to monitor all these distance selling thresholds. You have to keep track of sales at different tax rates. Now, every single distance sale is included in one return, and it's the tax office's obligation to split those taxes around to where they should be declared. So you have to file your normal VAT returns, but Poland would just be your Poland to Poland sales, nice and simple. Anything that's going from one country to a different EU country is just in one VAT return now, as opposed to having to split those out into different VAT returns, monitoring different thresholds. All your distance sales go in one return, and it's the tax office's duty to split them out amongst the other tax officers.
All right. How much time does it take to get VAT in UK? I think you talked already about this, but let's do it again.
Yeah, so VAT registration in the UK is a one-time registration fee of £100. And at the moment, it's taken about 6 to 8 weeks to become VAT registered in the UK.
And talking about your services, if someone wants to work with AVASK, do they get like manager or designated contact?
Most definitely. So at AVASK, we really pride ourselves on having a dedicated VAT advisor. For example, with your EU VAT, much like how you have your accountant who you can ask any questions to, you'll always have a designated point of contact. So for example, myself, I've got some clients I've had for 4 or 5 years, and I've always been doing that EU VAT alongside them. So you do have that designated point of contact for any queries you have. And Tim from the US side, I'm sure it works exactly the same, that you have that designated point of contact.
Yes, Alex, it works exactly the same way. So if you're looking to register for sales tax here in the US, yes, you'd have a designated point of contact, somebody that you can always speak with live with any questions that you may have.
And if someone is using your services for US and for Europe, they will have 2 people to talk in AVASK?
Correct. So you have, whether it's for accounting and customs, you'll have all these designated people, but we really communicate alongside to make sure you have that best advice in all different sectors. It's really well-rounded sort of one-stop shop service.
This one is interesting. Have you seen decline in interest of selling on Amazon UK because of Brexit?
I wouldn't say so, no. I think a lot of people expected it, but I would say the UK is such a strong market, especially with Amazon. The UK and Germany, I'm sure Piers is agreeing with me as well. The UK and Germany are such predominant markets, and I think everyone knows how much benefit there is from selling in the UK, especially for US customers. You don't have to worry about your listings and changing language. It's just obviously maybe a few sort of typing tweaks. I can't think of the word off the top of my head. But no, we haven't actually seen a decline. I think if anything, people are more interested by the UK, and those sellers who are maybe just in the US at the moment and they've always thought to expand into Europe, it could seem a bit daunting. So for now, just entering the UK market seems like a nice way for them to ease into it and see how they get on just with the UK, because the UK does work similarly to Europe. So it's a nice way to transition into Europe, even though the UK isn't in there anymore, to test the waters. So I think it's encouraged sellers to sort of try the UK out now.
Another question about Europe. What documents are needed to store products in German Amazon warehouse and to sell products to Germany, but also to other EU countries such as Italy? So basically products are in Germany only, and what documentation or compliance is needed?
So at this moment in time, you would just need a German VAT number in order to declare your VAT filings. All of those sales that are going from German warehouse to your French customers from Germany, German warehouse to your Italian customers, they can all be declared in your German VAT return, regarding you haven't breached that distance selling threshold I've been mentioning. So if you haven't breached any distance selling thresholds, then you just need your German VAT number. And moving forward, so after July, you would just need your German VAT number, filing in Germany on a monthly basis, and your OSS VAT registration as well, to declare those sales that are going to Germany to France and Germany to Italy.
All right. Another interesting question. How to know which US company formation is the best for me?
It would first depend on whether they're a US citizen or not. Each entity has its own different tax advantages and disadvantages. And really, we would have to go over all the different advantages and disadvantages with each person to find out which entity would work for them best. Different things play into that, like payroll and corporation taxes and stuff like that. But it would basically go by a customer basis.
And talking about advantages and disadvantages, we have another question. What is the main disadvantage for sellers who have foreign entities selling in US?
The major disadvantage, there really isn't. Everyone's got to pay the same sales tax if you're looking at it that way. So everyone has to register for the same amount of states. Everyone's got to collect the same amount of sales tax for the items that they sell. I guess maybe the only disadvantage could be is if your entity is located in a foreign country outside the US and your tax rates for let's say your corporation or your entity is higher in the US. That would be a disadvantage to selling with your entity. But then you could always just turn around and ask us to form an entity for you here in the US, and that would get around that. And I say that could be maybe the only disadvantage for selling in the US.
Another point I would like to bring in terms of this question is like if you have a foreign entity, it can be more difficult to get for your investments, because if you're selling in Amazon North America, if Amazon US, then probably you will not get investments from US companies if you have a European company.
Correct. Yeah. Usually any company that's looking to make an investment in your product or maybe buy your product, they'll want to deal with a U.S. entity. So again, it all depends if you have a U.S. entity already set up. That may be a reason you may look to set up a U.S. entity if you don't already have one, is that you may be looking to sell your product or your business in the U.S. later on.
All right. Lisette, you have some question, right?
Yeah, what exactly has been changed for sellers who are importing their goods to UK from Asia or other EU countries after the Brexit? Like, what are the things they have to consider or do differently if we compare now versus what we had before?
I can take this one on. So firstly, if it's from the EU before Brexit, there wouldn't have been a customs border. So it would have been essentially very easy and automatic to move goods from the EU into the UK. For importing into the UK from other countries in Asia or in the US, there wouldn't have been many changes. However, we are seeing that HMRC, the UK, are becoming a bit stricter with regards to foreign entities importing, and it may be that you do require indirect representation when you are importing.
Just quickly to add on that as well, previously when the UK was part of the other 28 member states, you could have just had one EORI number to import into any of the different countries. What's changed now that the UK is formally withdrawn from the rest of mainland Europe is you've got two different taxing jurisdictions. So if clients are importing or exporting into the UK, you need to have a UK EORI number. And if they're doing it in any of the European countries, you need to have a European EORI number. It doesn't matter where you obtain your European EORI number, they're universal. So for example, you could obtain one in France and use it in Germany. But it's really important to note that if you are trading in both the UK and the EU, you now need two different EORI numbers.
Okay, very good. So will Amazon United Arab Emirates provide sellers with an VAT invoice for any VAT charged on their Amazon selling fees?
So in Amazon Seller Central, you do have what's called a tax document library for each Amazon marketplace. For any VAT invoices or any invoices you need for any marketplace, you can download them from the tax document library. It is a legal requirement for those invoices to be provided to you. So yes, any VAT invoices you should receive, you will find on your Seller Central on your Amazon tax document library.
Okay, another question about your services. So do we need EORI, I think it's European thing, to import in Australia, and does AVASK offers this service?
You don't need, EORI is just for Europe, so it stands for Economic Operators Registration and Identification Number. And it does what it says on the tin. It's so that authorities can identify businesses as an economic operator in Europe. So in Australia, there is no EORI numbers. You don't need one to import. and therefore we don't offer the service in Australia. But if clients are looking for one in Europe, then yes, we can help.
All right, another question about Europe and all these changes. How does OSS and IOSS work with Northern Ireland? Would Amazon still collect VAT from UK to Northern Ireland as it counts as in Europe? And does seller need, I don't know, 11 AORE number? What is the shipment is bigger? Could you, Alex, explain us why Northern Ireland might be a different, have different rules and so on?
I can somewhat explain, but to be honest, for this question, I'd need to know the business model. I'd need to know where incorporation and where goods are moving from. For those who maybe don't know, the Northern Ireland sort of got stuck between Europe and the UK when Brexit happened. So are specific rules laid out for the UK to Northern Ireland trading and Northern Ireland to EU. So it sort of is on its own in the way it works at the moment. In order for me to fully advise on this question, I would have to have the business model in place. So please feel free to contact us and we'd be more than happy to go through these questions with you. But I'd need to have sort of the full scale.
All right, another question about your services. Can you consult on tax compliance in probably seller's country of residence with a business registered in US? Let's say it's a Moroccan seller living in Morocco and selling with US company. Do you consult in these more complicated situations?
As in, if they're selling in the US, and can I advise them on Moroccan tax law?
Well, about compliance, they mean about tax compliance in own country. So I'm not, maybe the question, how many countries AVASK is knowledgeable about in terms of, in general, in taxes, maybe?
I guess.
Go ahead, Piers.
You've got international taxation treaties between certain countries. So, for example, Tim would be really versed to talk about the agreement between Australia and the US. I think, again, in terms of providing specific guidance and consultancy in these type of scenarios, it's always worth setting up the free 30-minute consultation call so that we can build out a bigger picture of the client's business model, what the structure looks like, where the home residence country is, and which marketplaces the company is registered in. And I think by having a more comprehensive understanding of how the company operates, we can then dig down a little deeper and give specific guidance depending on their situation.
All right. Another question about returns. So let's say a customer in France buys a product which is shipped from German warehouse. And now the customer returns the product to Amazon warehouse in France. So it was shipped from German warehouse and it was returned to French warehouse and instead of German.
Yeah, that's still absolutely fine. So, for example, so it goes from Germany to France. That is where the taxable sale then happens. So, say no distance selling thresholds are breached, and it's subject to French VAT because that's where it's left. Then you would then reclaim again the VAT from where the place of supply occurred in the first place. So that doesn't matter. Sale France or Germany, the refund would still be considered back to France. So the fact it's gone to a different country it doesn't matter. It won't affect the VAT return at all. It's where the original tax point was that's taken into account.
So the seller doesn't need to register for French VAT to receive returned product.
In terms of registering for VAT, that's different. If they have a return sent to the into the French warehouse, then you are considered to have stock in France. So you are triggering that requirement in that sense. Sorry, I thought it's in terms of the VAT liability. But no, if you have that return in the French warehouse, then technically you are triggering a requirement for French VAT. So it's really essential that in this case, in Amazon, you make sure your Amazon settings are covered regarding fulfillment. You tell them where stock can be held. If you have that option for your returns to be sent to any country, that does pose difficulty to you because you could be accumulating that stock, therefore triggering that requirement for VAT registration.
Actually, I have one question, Augustus, if I may, regarding, you mentioned the Amazon Seller Central settings. So my question is, do you help Amazon sellers to make sure and go over those settings as well? Because I know it can be quite overwhelming and difficult to understand different things in Amazon Seller Central. So is this something you help sellers with as well?
Definitely. We can most definitely understand and advise as much as that's relative to the VAT side about Amazon. We're really in depth with Amazon. Obviously, we work with sellers all over the world with regards to Amazon. And we know that there's so many reports available. So whenever we're speaking with our clients, we sort of navigate them around the website. We can share our screens with them. We can send them step-by-step guides on where they should be pulling data from and what's essential. Like you said, with inventory, making sure that their inventory settings are complete and accurate and they've got no risk of sort of triggering that back threshold by having that stock, or as I mentioned about the tax document library, making sure any VAT or invoices that are due to reclaim are downloaded so we can reclaim them. So we really try to navigate and guide sellers through the platform to make sure all of their needs are met.
Yeah, really good point, Alex. I think just to pick up on that as well, one of the key competitive advantages that we have over maybe other providers in our space is that we've had a partnership with Amazon for the last 8 years. So we really understand the interfaces that they have in place. We understand the systems. And as Alex has just mentioned, there's a lot of different ways that we can help make sure that clients are set up correctly through their seller centrals.
Right, a few more questions about Europe. So I'm sure it was addressed in the presentation by Alex, but the question is, so do sellers still need to register for VAT for different EU countries they store goods in after 1st of July? I think yes, right?
Yes, correct. Yes, wherever you have stock, you still need VAT reg regardless of pre or post July.
It's only one-stop shop is only in terms of like distance selling threshold changes or something like
Correct. So wherever you have stock, you still need that VAT requirement. The July changes just affect sales that are going from one country to another. So like I said, you've got a warehouse in Poland, sales going to Poland, they're still taxable in your Polish VAT return. It's those sales that are going Poland to France, Poland to Germany, for example, that need to be declared in that one-stop shop return. So wherever you have stock, that requirement for VAT reg won't change.
American question, what Amazon sellers have to do when they sell products to the states in which Amazon is not collecting sales tax?
So in the 4 states that we talked about earlier in the presentation, what we would need to do is register you for each state for sales tax, and then turn on the settings in Amazon Seller Central. As Piers was mentioning before, we can walk you through, make sure that everything gets set up correctly so that Amazon starts charging sales tax on all your transactions in those states. And then we would file those sales tax returns to make sure you stay compliant.
All right, we have a question about mistakes Amazon sellers do in their bookkeeping.
Is this a US side or a UK side? But I'll take
sides. Yeah, we can go over both sides, so you can go with US first.
Sure. US, again, the most common mistake I see is the recognition of revenue or turnover. A lot of the people who do their own bookkeeping or outsource their bookkeeping to bookkeepers don't realize that recognizing the revenue that you have on Amazon, you've got to pick up the sales before Amazon takes out their fees. A lot of people will just pick up what gets deposited into their, let's say, their checking account or bank account, which is not your true sales number. It's after Amazon takes out their fees. And here in the United States, that could cause a huge issue, a huge tax issue. Why? Because in tax documents on Seller Central, Amazon issues what's called a 1099-K. That tells you really what your sales were for the year. Amazon also sends a copy of that to the IRS, the taxing authority here. And the IRS will look at your tax return to see if you've picked up enough sales. If you do not pick up enough sales, they won't just send you a warning letter. They'll send you a letter saying you owe a lot of tax and not explain why. And so it's a common mistake that's made here in the US, but it could be a costly one.
And I'd say from my point of view, some of the most common mistakes is the recognition of the difference between sales tax and VAT. So, for example, you have lots of maybe US sellers expanding into Europe, and they don't recognize that the sales tax isn't added on at the end, and you have to mark up your products to include the VAT element. And likewise, for that opposite way around, you can have sellers expand into the US and already mark up their products and have the sales tax added on at the end. So that's quite a common bookkeeping error that can occur. And likewise with Europe, it can be recognition of the different VAT rates. So obviously every country has a different VAT rate, has a different reduced VAT rate, has zero rate of VAT rates in some instances. So it can be different per situation. You also have wrong inventory calculations, sort of that monitoring of that opening and closing stock throughout the bookkeeping as well. So it can be a really mixed bag, and I think it tends to occur when people are venturing into new markets with new VAT laws or US laws, and it's that recognition of being able to adapt to e-commerce. You have e-commerce accountants, you have accountants, so being with that dedicated VAT advisor and e-commerce advisor is so essential in this industry because it does work completely different to a standard maybe accounting and bookkeeping service. So having that e-commerce knowledge is so important, and having that international tax knowledge, having these people at AVASK that can guide you on, okay, we're starting your expansion into Europe, make sure you're marking up your products, is so essential to make things done correctly and efficiently.
Okay, I think we have one question for Toby. How can I calculate my custom duties for importing goods to UK?
It's a very good question, and one that I would definitely advise sellers to do before they're shipping. So the import duties will depend on a few things. It will depend on the value of the goods, the commodity code of the goods, and also the country of origin. So the import duties are normally a percentage of the value. So those factors will determine what import duty you'll have to pay when you enter the UK. The transport company or the customs broker in the UK should be able to advise you how much that is. If you're using AVASK, we can clear your goods in UK customs. What we will do is actually inform you how much import duty you'll have to pay, how much import VAT you'll either have to pay at the border or you can postpone when you're shipping. So good question, and that's how you do it.
And question for Piers, I guess. Where do I find which transactions are subject to low value imported goods GST in Seller Central?
It's simply goods that are under $1,000 in US. So in terms of the transactions, if you're going to be sending any shipments into Australia that are valued under that $1,000, then you'd be eligible for the low value imported goods scheme.
All right. And someone wanted to add something? No. Okay. So next one. Can you provide domestic accounting and tax compliance beyond VAT for European companies, Bulgarian company, for example? Or maybe you can recommend people in those countries you work with?
At this moment in time, AVASK mainly work with the UK and the US accounting. However, there are some surprises on the horizon, so definitely keep your eyes peeled for correspondence from AVASK on other countries we are going to be getting involved with shortly. I'll give you hints such as Spain and Ireland, and maybe a few other hidden gems. So it is something we are expanding into. However, it is important for us that if there is ever a service AVASK can't provide, part of the dedicated advisory service is us to find a good either alternative or fit for someone who can help you. That's why we're so keen on having dedicated advisors and having great partners, because it's important for us to provide our clients that all-in-one service. So if there is anything we can't do that's outside of our remit or anything such as that, we will find someone who can, and we have those partners for that reason. However, we are getting involved in VAT accounting, domestic accounting in such countries, Ireland, Spain, France, and maybe a few others. So definitely keep your eyes peeled for that.
Right, and one more time, of course, if you are watching and you would like to get in touch with AVASK and their expertise, you will find the link below in the description. to open up the landing page where they describe how they can help you, an Amazon seller, and there you will find a form if you have a very specific situation you want to resolve, you have some issues or questions, don't hesitate to contact them. And another question about Europe: do I need a virtual address to sell in Germany? I'm not sure. It's quite a tricky question. Maybe it depends on the situation. I'm not sure what that person wants to use it for.
Just to sell in Germany, you wouldn't need a virtual address as an overseas entity, no. There might be, it depends, as you said, depending on the context of the question. If they're an overseas entity that wanted to sell in Europe now, there may be a requirement for what's called a responsible person, which I believe Toby might have covered. But yeah, in this scenario, fortunately, there's not really enough context to be able to give a definitive answer. So I'd say in this individual case, just reach out to us afterwards and one of us would be happy to help.
Yes, and another question again about, people are confused about these European changes. Do I have to change anything inside Seller Central settings after 1st of July? Are you aware of this?
At the moment, there is no requirement to change anything. Amazon have been really, really great in keeping all sellers informed as well of the changes that are coming into place from July. So sending out lots of emails. So make sure you're checking your Amazon comms as well. At this point in time, similarly to when Brexit happened, Amazon began collecting and remitting for the UK. There was no changes needed. And this is similar to what's happening to UK is now happening in Europe. So we do not believe Amazon will require anything to change or any settings to be done. If there was anything, we would always let all of our clients know. And Amazon will also send out comms. Amazon are really, really great at advising their sellers of what needs to be done. At this moment in time, no, just look to register for your OSS country if you need OSS. If from the illustrations I went through earlier, you're unsure if you need OSS, then please get in touch. And if you know you do, please also get in touch and be happy to go through your requirements to make sure you're set in place from the 1st of July.
How can sellers check in which Amazon warehouse and state their stocks is at?
So I know on Seller Central, especially here in the US for the States, they have a live feed to show you where your inventory or your stock is in each state. But that is always constantly changing. And I don't believe you can actually go back in time to see where your inventory was. But I know there is a place on Seller Central for you to go and check to see where you have your inventory and what state and warehouse it's in.
Yes, and it's the same for Europe. So you can pull stock reports, see how many pallets or whatsoever you have in whichever warehouse. Obviously with Pan EU as well, it's not yourselves moving your goods around Europe. So you can pull those reports to see where Amazon have got your stock. The Pan EU is all using algorithms. So if your stock is particularly higher in, say, Germany, that's because Amazon know that more of your customers are in Germany, more of your sales come from Germany, so it's best to have more stock there. So you can most definitely pull those reports. You can pull the stock reports from Amazon. If you get in touch with us, we can give you the steps on how to pull those inventory reports.
Great. Do you have partners in Greece?
At this moment in time, I would have to check. I can't think off the top of my head, but I will by all means check. But if not, as I said, it's important for us to find those solutions for our clients and really sort of seek the resources to provide the best alternate solution if we do not. But I will definitely research that question and let you know.
One specific question, what should I do when an Australian customer is saying he's a business and he's looking to be GST exempt?
So if you're doing B2B transactions between two GST registered businesses in Australia, then it would work in the same manner as if you're doing a B2B transaction between two VAT registered businesses in Europe. When you're doing your VAT filings, that transaction can be zero rated for the purpose of GST, because it's being or it's a transaction between two registered businesses, so it becomes GST exempt.
Cool. I just wanted to share some comments from the viewers. Samuel is saying, very valuable information, well-prepared, experienced and knowledgeable staff. Thanks a lot. There was another one. Gurdeep is saying, thank you everyone. This has been the best tax accounting webinar I have been on. You all have been great today. Thanks, AVASK, for providing so much valuable information without just sitting and spending time answering people's questions. Let me check if we have something else.
Augustus, just whilst you're picking up on something else, just on the question about Greece in particular, I just wanted to mention that one of our directors is actually Greek himself. So if it's a Greek seller that is looking for assistance, I'm sure we can assist. Whether or not we have a lot of partners in Greece, I'm not sure, but I'm sure our director has many connections that I'm not familiar with myself. So I'd say that we can definitely help.
Perfect. Let me check. I think we'll be wrapping up very soon. Any last minute questions, please type them in the chat. So let's see. There is kind of a question like if US tax responsibilities generally are the same for US entity and foreign entity.
The only tax responsibilities that are the same are for sales tax. No matter if you're an entity located in the United States or an entity located outside of the United States, everyone has the same state sales tax responsibilities. Income tax or corporation taxes, no, that'll differ. If you have an entity inside the United States, you have certain income tax responsibilities. If your entity located outside the United States selling into the United States, that's different tax responsibilities. So the only same common tax responsibilities will be for sales tax.
Perfect. Let me check a few more. Someone is probably missed the presentation about UAE, United Arab Emirates. And do we need to set up an entity to sell in UAE? I don't know how to read the abbreviation, but
No, the answer is you do not need to set up an entity in the UAE. To be honest, I don't know many online businesses that have established an entity in the UAE. I'd say it's far less common than somewhere like the US. It's very simple to sell in the UAE as a foreign entity. You just need to be VAT registered before you begin selling. So I'd always say before entering the UAE marketplace, make sure that you have your VAT certificate live, because the authorities are a lot more vigilant than what you might find in other marketplaces.
And question about Australian business number. How much time does it take to get? Maybe you mentioned in the presentation. I think it was 30 days or something.
4 weeks. So you're 2 days off.
All right. What happens when the customer returns an item purchased from Australian marketplace? Should I refund the GST to the customer?
Sorry, I wasn't sure if Piers was going to. I think we were both waiting to see who was going to go.
I was just reading the question. Alex, are you familiar with refunds on GST, VAT when it comes to returns?
Yes, it would depend on the scenario. So if he's purchased from the UAE marketplace, it should be the full amount of the sale that should be refunded to the customer. So regardless of the GST element, the full amount that the customers paid should be refunded. And then likewise, if you've declared that GST in your return, you would get refunded the GST in your return, because we declare it as a refund, so that the customer should have the full amount returned to them, and that would also be returned to you in your GST return.
All right. Do you have any tips for good resources to learn more about US sales tax system and what are exact laws? Because maybe 50 states, it's overwhelming.
Yes, it is overwhelming. No, I'm not sure about a best way to learn. Calling AVASK is probably a pretty good place to start, I think. There's so many different questions that can come up, whether it be just state sales tax, but then you have local sales tax, like here in New York, where AVASK is located in the US, you have New York state sales tax, but then we're right near Manhattan, so there's New York City taxes. It can get pretty complicated pretty quick. So I think the best way to go about learning about sales tax or any of the taxes is to discuss it with us, so that we can really focus in on what kind of question you have and what you're looking for taxes wise.
Yeah, just to add on that, Tim, as well, with regards to online businesses, I think taxes and other elements of running a business can be very time consuming. And a lot of business owners that run online businesses will need to allocate a lot of their time on things like the marketing, growing the brand, growing the product. And typically they don't really want to allocate the time on taxes because, as I said, it takes up a lot of time, and also they might not be the most knowledgeable. So I'd say that it's really important that for businesses that are going to be successful across a variety of marketplaces, so having a diverse approach to selling online, as we said before, to use the experts that are available. So AVASK for taxes, and as Alex mentioned, we've got a huge network of partners that we can also call upon to give clients a really holistic approach to their online businesses. So if it's shipping, translations, payments, we've got partners that we can introduce and help in lots of different client scenarios.
And Piers, just to build on that even a little more, it's never too early to contact us, whether you've even started selling yet or you're just thinking of starting to sell. As Piers just mentioned, there's a lot of different tax rules out there. So at least here in the US, just choosing the type of entity has long effects on what kind of taxes you're subject to and what you can do. So don't think that, hey, maybe I'm just getting started or my sales are only so much money. Reach out. It can't hurt. We're here to and happy to talk to you, because some of those decisions can have big effects, at least on the US side, on the type of taxes you may be subject to.
Yeah, I'd say delegate the tasks that you don't enjoy doing to someone that does enjoy doing it. And a lot of people don't enjoy tax. So that's where we can come in.
Great. We have another question about returns. You might have answered that. So when calculating the sales, does the return get deducted? Probably means like 100%. Or what happens with VAT and when we receive the returns?
Yes, so the same situation. You make a sale, it gets returned, then yes, it does get deducted. All of the returns are shown on the reports with the sales. And as long as, if, for example, you're on your own website, make sure you take that into account with your reporting as well. Most marketplaces you work on will always take your returns into account. So most definitely. And when you obviously pay the VAT, you'll pay it maybe in your March return because the sale's been made, and maybe it won't get refunded or returned until April. Then that will come off your April VAT due. So most definitely, they're always taken into account. You'd never pay if the amount's been returned.
Right. I already lost the Windows on my computer. All right. I think we will wrap it up. I see another few appreciation messages. David says, thanks to the planet, great information and insights. It's AVASK planet. Rip says, thank you all, AVASK and Orange Click, for amazing, valuable information you shared with us. Catherine says, simply thank you all so much. So again, if you want to contact AVASK and their expertise, you'll find the link below in the description where you can contact them and apply or send the form. You will find there on the landing page with your situation, with your issues related to taxes and customs in Europe. So they will be happy to help you. We had here Alex, expert in EU, Piers, expert in global tax, understood, Tim, expert in sales tax, Toby, import-export expert in Europe. And we had also Tom, who is also knowledgeable in US sales, and he had to leave earlier. All right. Thank you very much, everyone. And thank you for your time. Again, if you need help, you'll find the links below. If you like the content, click the like button below this video. Thanks, AVASK team.
Thank you very much.
Thank you very much.
Thanks.
Bye.
All right, and now, thank you very much for watching this video. If you want to get in touch with AVASK, you will find the links below in the description. And now I would like to invite you to watch other video, very short video, where AVASK explains how they help Amazon sellers and what they can do for you in terms of tax compliance in different countries.